Good morning, my friends, and welcome to the Breakfast Club. My name is Darren Hancock, and I'm here with you today on Thursday, expecting a little reversal day today. Thursday, March 7th, 2024. All right, let's have a look at where everything's at here this morning. Got some meetings going on this morning, some news being released. I'm liking this fill of this fair value gap here on the daily. Still waiting for my buddy Curtis, for Kirk to pop up. Haven't seen Kirk in a while. Now, this kid was super dedicated to our calls. Pumex, holy smokes, you're the first one in today, and you're new. Welcome, Pumex. Yeah, Kirk used to be here, like he'd be the first one in the door every morning. He was just loving this stuff and super keen on it. Made lots of money, got his funded account, he was getting paid live money, and suddenly nothing. So, Kirk, if you're still around, just pop in, say you're okay, and I'd like to know you're okay. I feel like something's happened, and I hope you're okay. I hope everything's going well for you, my friend. If you've moved on, that's awesome. I'm happy for you. I just want to know you're okay. I just missed my Kirk in here in the morning. I used to say, look at all these guys popping in. Welcome, welcome. Yang Lee. Morning. I'm just going to call you Christian. I don't know if I can pronounce your first name there. Hello, good morning. Which ICT series did I learn? I did them all, my friend. I've done every video he's ever put out. I even did the stuff that he pulled off the internet. Back in the day, he had his own little channel, or a place where he could put he held all his videos, and I watched all of those. The Market Maker series, the Sniper series. I was back in the 2016. If you read the bio up top, you'll know a little bit about my history. I've been through all his mentorships. I was with the original 800 back in the day, so I've been through all his stuff, even the little extra bits that he posted. I was with him during the day when he'd be talking to us like I'm talking to you guys, live, twice a day, sometimes. Glenn Powell, how are you doing? Glenn, you're over there in Africa, aren't you? Is it Jiang Tai Li? Is it the G pronounced as a G or a G? Is it Jiang Tai Li or Jiang Tai Li? Or am I not even close? Good morning, Thomas. Justin, good morning. You've started the 2022 series. Yeah, the 2022 mentorship is good. Don't rush this, you guys, though. If somebody was asking me what video series should I start with, I'd say start with his core content and work your way forward. Yes, I know there's hundreds and hundreds of videos, but this isn't something you're going to learn in 2 weeks. I don't care what anyone tells you. It is something that, even if you start to understand this, you've got to get past the next greatest barrier is yourself, your psychological propensities. You'll suddenly see greed and fear rear its head in your life, even if you were never fearful or greedy in the past. It'll come. It's a whole new thing that, he touches on, talks about quite a few times throughout the series, but it truly is a whole new hidden learning. You think, wow, they've got all this visual skill sets to learn. Then you have to learn your own psychology. Then you have to find harmony with it. I can call the charts pretty good. I think I do pretty good calling charts, but when it comes to battling my own demons, and I did all the things wrong. Do not trade live while you're trying to learn this stuff. When Michael was saying don't trade live, he wasn't kidding. And me, I thought, I could do this. Nope. Should have taken all that time, years. I should have been taken in demo. I lost thousands of dollars trading live. I could not get past my own head, and then by that time, you start to ingrain a really bad neurological set inside your brain of self-doubt. When somebody makes it look easy, then you judge yourself because they make it look easy, but you forget the guy had 20 plus years back then. So be careful. Take your time. No rush. I'm on here every day except for when I go on vacations. I was going to take this on vacation with me, but I'm going to Hawaii in the end of the month. So the time frame going west is worse. It's terrible. I think 11 o'clock at night I might line up with something in London. I won't catch the New York session in Hawaii, so I've got to, if I go east, different story. Take my laptop with me, hang out with my friends there in Mexico, or in not Mexico, in not that I wouldn't spend time with my friends in Mexico, because I would. In Spain and England, my family's back in England, so that'd be an ideal area to do some trading, because you could catch London in the morning, afternoon you could catch, or in the evening you catch New York. You go out and enjoy yourself all day long. Just call me Jiang. Is it with a G, or you still didn't tell me whether or not it was with a G or not? I want to respect you. I don't want you to feel like you've got these really cool Asian names, and I want to make sure I'm treating you with the respect. So I want to try and get your name as close to and pronounced. I love languages. I love if you could pronounce it. If I could hear it, it would be better. I practice it till I get it right. I was studying CAM models. Oh, Justin, you're studying the CAM models? Good. What it provided you there was the basics of understanding the CAM models. You come here, I'll show you how to finesse them. Anybody wants to take the extra time, I'll show you how to finesse them in here. Richelieu, my Russian friend, how are you? Yes, 5 p.m. over there. That's the new morning for Richelieu. Spartanberry, unless I see something obvious today, I'm just going to tape read. ICT mentioned in the past that the best trading days in NFP are Monday through Wednesday, so I try to sit out Thursday, Friday. Spartanberry, that is probably the best logical thing anybody can do all day today. Stay out of the markets. Don't be so quick to jump in unless there's something like banger fun, like I'm looking for this spot right here. when that comes up and fills the rest of this blue box here, if I get a nice reaction off of here and a setup that forms in here, I'll definitely go short on that just for the today, and then I'm out and I'll wait for non-farm payroll to end tomorrow and wait for the afternoon session probably for the setup, because it smooths out in the late or in the afternoon after non-farm payroll. You can usually catch a trade there. So very smart. Stay out of this. I don't think I'm going in live on anything today unless I see something really bomber. Kitty, good morning, my dear. How are you? Rain, hi. How's it going? All right, I'm going to go with Guillaume. Guillaume. Well, I've never had 29 people in here within 10 minutes of my show starting. This is awesome. Usually it's just me and Kirk, and somebody else will pop in. Usually 2 or 3 of us sitting in here for the first half hour. All right, first I got 20 minutes. I got to move along here. So I'm looking for this area up here in NASDAQ. I'm looking for that high there, that box to fill, and we'll see what kind of reaction I get out of that, whether we climb on top of it or whether we react off of it and come back inside it. I'm looking for an inside. This will be a beautiful little inside 130 handles inside this blue box. If we get a reaction off of this and start coming back into the middle, that might be we stay inside here. I'll be all right with that. Yes, looks like we've got a breakdown below here. So this is a typical setup that would occur for a reversal, but we have a continuation, a climb up. We've come off of this order block here, this little consolidation. We've had a cam 2 entry, a really deep cam 2 without taking the stop loss. It's just short of the stop loss there for a cam 2 entry for a higher price. Look for a fill of that, and then that will be here or out at the high. And then after that, we've got to look to get above that order block there, rejection block, and then see what kind of reaction we get in here. If this is a reversal Thursday, we might see just a wick up into the rejection block and then pull back into the range, into the order block. Look for this inversion here to hold price on the daily. We ought to go above it or we go below it. So considering the bullish trend, you'd expect it to continue up, climb up on top of it, and continue higher. Much like this one here was fair value gap. We stayed come down into the old high here. I'm trying to give you another example of that. Oh, this just kept dipping down inside. This one finally closed above right here and did not dip back down into it to get you back in for a long. So you got one that's going up, and well, you have 2 going up right now. I guess all 3 of them are, but overall we've had a swing point, breakdown back to the order block here, run back down. We're still inside the inversion. This is an inversion here versus a reclaimed fair value gap. We have we have an inversion. We've come back inside it. Now typically you'd want to see a reaction anywhere inside of here, roll over and keep coming back down and start digging down into lower prices. So these are all potential entry points. That's a cam 1. If that's your consolidation right here, cam 1, cam 2 will still keep you inside the fair value gap all the way up to here. What's that range from there to there? There you go. There's 50% of it right up for a full fill of that. So if you put your entry here, your stop loss just above that, you should be relatively safe for a continuation on the downside if that holds. If you go cam model and you go inside the reversal model, you're minimizing your losses if you're wrong, if that continues up. Dixie, wow. Derek in his crystal ball this morning was giving a euro a run down. I was saying, nah, it's going up because Dixie's going down. So I'd expect the Dixie to go down, but a run below these lows here. There's a big pocket of liquidity down here. We are in a CAM 2 model here, so this may just react off of this and come back into the range. You're in a deep CAM 2 model now. Look, if you pull this one from high here, if we close below this, then close your stop loss out. We're running for the lows. If we reverse past the 50% and start climbing back up again, look for that to return, and we could start running for a little higher prices again as a seasonal tendency. I think Derek had mentioned that the seasonal tendency has a pop up here before going back down again this month. So I was looking for up prices on pound and euro. So we've hit the boxes that we outlined here weeks ago. We were looking for it to draw back into here, and it did, and we're looking for it to draw up into here, and it's here. So far we're hitting it pretty stellar. We're looking for equal highs to be taken. Highs all the way through here. There's a lot of liquidity sitting up here, and the rejection block, obviously. So we'll see what kind of reaction you get off of this today. And euro did do. I was talking right here to Derek, and I was saying, oh, yeah, it's definitely going up. When it hammered down, it's like, what kind of crystal ball you got over there? I must have missed that. But that was during the news release this morning, so we have a bit of reaction off of that. We've had a swing consolidation, so look for this consolidation here. For CAM 1, CAM 2, there you got your CAM 1 right there. I didn't see this. Here's your CAM 1, body breaks above CAM 1 entry, go long for highs. So that was a perfect CAM 1 entry right here. Rafiq, how are you, my friend? Good morning. Let me carry on here. Finally, the Canadian dollar must have sold some oil or something. We did not take out the highs we were expecting up here. I did get a nice little retracement because the American dollar is dipping down. So if we do get a return back to higher prices on the American dollar, you can expect these highs to get taken again now. I don't think they're going to leave those untouched before heading all the way back down here. So if we do get a little traditional pop-up or seasonal pop-up in American dollar this month, then look for these highs to get taken again, and then the reversal to start happening. So that was my objective there, looking for Canadian dollar. Not that I trade Canadian dollar. I really dislike trading that currency, even though I'm in Canada. All right, finally we had our little breakout above our daily fair value gap. It was nice. We didn't manage to get back in and buy to get long on it. Now we're inside these two fair value gaps, so we've hit the mean threshold. I was kind of hoping we get a little dip down in here onto this one more time as a long potential. And here's your CAM 1 model if we ever come back into that to get long. So right now still long on New Zealand dollar. We've broken above this fair value gap here. So if we close above that in the next or today, then look for it to provide a level of support inside this fair value gap to push for higher prices. Its fair value gap open is at the same place as the high of that SIBI here. So if we get some support in there and continue pushing higher, look for that order block to give way, find support on top of it, allow it to give way, and then start running for higher prices. That would be the general theme, but as you know, we can get lots of retracement back into discount arrays and premium arrays. So we're inside this range. This big pocket of liquidity splits the difference between highs and lows and premium and discount arrays. So we can quite easily come back and work either side of that. Australian dollar, same kind of thing. We have a breakout, didn't get a chance to get back in. Really strong versus the New Zealand dollar. Look how close we came to getting back in on that for a long this morning. Didn't get it. Versus here, look at the big break difference. Did not even give you, it opened and said, we're out of here. So look for these equal highs to get taken out. And again, this fair value gap on the other side to get cleaned out. Now, if this inversion, or sorry, if this rejection block here holds, and then we don't take the highs out, look for a retracement back into this range. And again, your CAM1 model for a long-term play could be just delicious here. For like, you catch this long, for up here, you're looking at 300 or more pips. Again, be very careful about that. There's lots of things that can happen long before that PD array up there gets hit. So split your CAM model all up in here. There's 2 of them in there, not 3. We did get a nice reaction off that 50% we were calling way back here. So that's excellent too. Japanese yen, well, look at that, finally giving up the ghost. It held there like crazy off that breaker's mean threshold. Look at that, just held price like a rock. Solid breaker, love it. Breaker senior array. So now we have this breakdown. Look for a return back into this area right here. If the American dollar starts to rally again, look for it to come back up into this area, anywhere inside here for a buy, which is also your CAM1 model. Maybe it can go as high as CAM2 model for a run all the way down into glory. Premium discount, like array to like array. Keep those in mind. They are awesome. Oil, what's the oil up to? I got 8 minutes here. 8 minutes oil. Let me get all this stuff off because remove drawings. Wow, that's a mess. I've got nothing solid in here. Nothing solid at all. Look for order block breaker right here. Draw that out in time from 76.06 to 78.20. That whole area can come back inside that. Ideally, you want to see the mean threshold, like this candle here came back to the mean threshold of that. I'd want to see that hold price. So yes, you're cutting through all this stuff, and you may not believe that, but if you don't, then you don't understand ICT stuff, because breakers hold price. Breakers are amazing. Once you get above them, they come back. Look at this. Here, we finally break above it on a close up here, drive up, come back down. You hit it multiple times. We even hit the mean threshold. That holds price. Now I want to see this react off of this and start marching back up again. If we start breaking through the midpoint of this candle again, and we start getting closing below that, then we're going to look for a run down to a deeper array, which is this mean threshold here. So you may come down and just pop below this into this mean threshold. There's a slight imbalance in here. Oh, it hit it already. It hit it already right there. Yeah, I wouldn't want to see this low get taken if you got more upside prices. If it gets taken, we're back inside this range again. And then you're got to allow it to come all the way down to that whole inside of that breaker. So it's got lots of play in here. So ideally, I'd like to see that kick back off of that. We validated this order block right here, and see how we're digging through it all in one candle. So your ass is next. If we eat through, we come back into 1, 2, 3 order. Yeah, I think they're taking that low. If we don't kick off of this rejection block now, they're taking that low. Okay, we got one more thing here. Make sure you look for 50% of that. Your line in the sand really is 50% of that wick. If you close below 50% of the wick, they're definitely going to come back lower. Gold. How do you like your gold? Shiny. I'd like it shiny. I don't have much here on gold. We're inside this inversion here, which is good. Look here on the daily. Everything we show you on the 1 minute chart, you can find here on the daily. There, you don't have to change any idea about time frames or changing your thoughts about time frames. Is exactly the same thing. We have fair value gap forming in here. We closed above the fair value gap. We came inside it. Tap, tap. Look at that. On top of it. Tap, tap. Inside mean threshold. Tap, tap. One more time. Now you're looking for gold to come back into this order block here. So you're between a senior array. I like to call this. This is a reclaimed. Just so you know, it's a reclaimed fair value gap. It's not an inversion yet because we haven't gone below it and come back up to it. So this is a reclaim. You just keep reclaiming this fair value gap here, just so you're aware of the difference between the two terms. And you guys aren't into Canadian banks, so let's get back over here. There you go, all in 4 more minutes. Quick analysis on the daily for... Okay, having a bit of a stretch here. 43 people, welcome everybody, holy smokes. Dave Barry, good morning. I'm doing well, I've learned a lot from your broadcast. Well, I'm glad. I'm glad you're learning stuff, my friend. If it moves you ahead in the world, just that extra bit more, you can get a little boost here. My job has been completed. But there's so much more to do. So much more to do. If I can help shuffle you guys down the road to success a little bit faster, further, nothing makes me happier. Nothing makes me happier. TK, good morning. Young. NQ is touching daily inversion fair value. Yep. NQ is way into the daily for inversion fair value gap. It's touching the mean threshold of that, my friend. Touching the consequent encroachment. You'll hear me say mean threshold. Just understand it. They're interchangeable for me now. It's terminology, but ICT does call it consequent encroachment, not mean threshold. Mean threshold's usually stated on a candle, like a breaker has a mean threshold. Fair value gaps, inversions have consequent encroachments. Gaps have consequent encroachments. So forgive me if I keep giving it the wrong word. Sometimes my mind goes faster than my mouth. So now we've broken yesterday's high. We've broken yesterday's high. Now we look anywhere inside here, we look for a setup, for a short. If we don't get it, we'll just let it keep rolling. And it's Thursday. It's an on-farm payroll week, folks. Don't rush this. We've got plenty of time to catch ourselves a good trade. Look at the support right off that, just banging around on that mean threshold there. Now, how many people really look at the consequent encroachment of this fair value gap and find any level of support there? Watch this. If we take this even one step further, that's what I love about TradingView, is I can create whatever template I want out of a fair value gap, and they're there, locked and loaded. My alarms. The open has begun. There's the 25%. Look at it banging on 25%. Who would look at a fair value gap normally? Most people's analysis, if you haven't studied ICT stuff, and break that into quarters and see anything that's logical in here. Work in the 25 to 50, work in the 0 to 25. There's your 50 banging around on that. Coincidence? Go back through them all, you'll see. Okay. So we found support off of this fair value gap here on the daily. Today we came down, tapped it, exited. So we're either looking for a fill of this fair value gap here, and then you start to see a wick forming, like this day here, see a wick forming. Or if we pop above it, we're looking for a new high. Here's the World Cup standings. Let's just show those real quick. And the winner is, so far, Sergio Borja. Look at that, 353%. You go, Sergio. You go. There's something about Fabio here. Valentini. Fabio Valentini. I like this guy. Why? Because that's my favorite number. 9 or 99 or 999 or 99.9. I love all the nines. That's my favorite number. So I'm for Fabio. Let's go, Fabio. Look at David. my lone Canadian hanging out there. Come on, buddy. Hang in there. My poor Darren Hill has fallen off the top 5. He's probably sitting right here. Come on, Darren. Get it together. See, how can you look at a chart and get excited? Cheer it on. It's stagnant. But hey, cheer away, my friends. No ICT yet. Come on, Michael. Make your appearance. We want to see you up there, buddy. This is his month. He's having some family stuff going on right now, which is a shame. I wish him all the best and his family. The mother-in-law, wishing her some peace. It's a terrible thing that they're all going through right now, so my heart goes out to them. And if I was him, I wouldn't be thinking about trading either. So much love and respect to you, Mike. Prayers and wishes your way. You and your family, especially your wife, what she's going through. Okay, so we've got the opening now. Lots of chop. Oh, the Blue Man Troop is here. Derek, welcome, welcome. Good morning, folks. What magic do you have in store for us today, Maestro? Well, we're still looking for this, the big blue box. The filling of the big blue box. I'm looking at this setup this morning. We ran the lows out. Oh no, we didn't run the lows out. If this would have popped down here, this would have been a nice setup to, as soon as the body breaks above it, come back, tap it. This would have been an ideal setup for a long, right inside from that gap there, all the way down to there. As soon as you break above it, right there, tap down, you're in. So all in one candle. You gotta be really steely-eyed to see that. This right here, look at this cam model, cam 1 model. You gotta be really, again, you gotta trust your thing. If you're looking for this higher prices and you see this giant consolidation, look at this. And again, it's a matter of how much you trust your cam models here. What one am I looking at here? That's not it. Is this one? Is it this one? This one. There's your consolidation range right there. Does the price close above it? Yes, it does. Then what does it do? It goes boop, taps it, cam 1, and leaves. Right there. The rule is, does it close above? Now, what you want to consider closing above, everything from just above to way above, as soon as it comes back and taps it, that's a cam 1 entry. Stop loss is down here, so 1% sits here. So it's a small entry looking for a run. And the moment it starts to make a new high and break a new high, slammo, bring it right up, especially on a Thursday, is slam it up tight, and now you start to let it buck now, let it do its thing. And right now you're heading for our objective. So beautiful cam 1 entry right there this morning. Again, did you trust it? Did you take it? You'll see those cam models pan out for you more often than not. And if you're only risking 1%, and you've got a 3-to-1 return, you can get rich being 70% wrong. Don't trust me, do the math yourself if you want. If you've got a 3-to-1 return ratio and you win 30% of the time, it's still millionaire status. Take you a while, but you're still winning overall. Losing 70% of your trades, as long as you have an R3 setup. So what's an R3 setup? While we're waiting for something happening here, I'm going to do this for you. This one's slightly off. There we go. Look at that. R3. If you enter in here, you go R1, R2, R3. You hit that. and you pull it right up into here, and that's just a matter of as soon as it breaks that high there. So you see it come back, and it touches here, makes a high, comes back. If it breaks that high again, go to break even. Now your R ratios are just, now you're not going to lose anything. Now this is all gravy from here. So not only do you have a R3, you also have a zero stress trade really quick. As soon as it breaks that high, you're out of there. If it does come all the way back down, then you probably have a CAM 2 entry, or you get taken out. Your choice, right? Oh, what do we got going on here? Let me remove my pictures. CAM 1 for higher prices. CAM 2. Stop loss here, 1%. Not that you're trading. We're not trading today. We're just playing. Just playing. So there's your chance to look at, watch it now. We're calling it before it happens, and you're aiming for here. So we're calling it before it happens. If it takes us out here, then it's a break in market structure. And we want to see a body take us out, not a wick. If we close this candle, here's how you finesse this. If we close this candle on a 1 minute below the 50%, you're out. Look at that. Dave's like, I just took a CAM 3 model entry. Good for you. See, now I'd be slammed up against break even on that. Look at that. There's your drawdown right there. I'd slam that sucker right up against it because it's a Thursday. I would not want to lose that low now, because we're coming back into this. We're below this inversion here, right? So body's traded below it. Yes, I'm allowing it to come back to a discount, but I wouldn't want to see that take out. If it does take me out, then I'm at break even. But that's just me. Not saying that's how you have to trade it. It's banging right on it again. So your stop loss is sitting here and it still hasn't tagged you out yet, but it's come right back to 50% of the consolidation. That's a strong point. It's a CAM 2 entry. So we'll see what happens here. Talk about a squeeze. I'd be like, I don't care. I'm so tight on my stop loss right now. If it comes back and takes me, I don't care. I'm out. Because that means we're probably going to close. Yeah, there you go. So you'd be out now with no risk. It looked sexy there for a moment. It just came back to the fair value gap, tapped it inside the inversion. We've already traded below here to go short. So now I expect this low to get taken. Right? Because once it's already hit that spot and it's left, you go, okay, it shouldn't hit that spot again now. It's done its thing. It should leave. So stop loss comes to break even, or wait for it to break the high, whatever you like. But my logic is, well, if it's hit the logical level that it should hit and it's starting to pull away from it, then great. Then it should not come back to that again. So then, and if you're wrong, it doesn't matter. It'll come back and take you out and you break even. Right now, your stop loss would typically would be sitting down here. Where does these close? See how we're closing right near that 50% mark? This is where my finessing can cost, but the general rule is put the stop loss below the low and see what happens. And have we closed below 50%? So here's where you really got to watch your finessing. We've closed below the 50% right there. And you're out. See how your stop loss would have been taken? So CAM rules or CAM models, yes, those are entries, but there's a way to finesse your way out of it if it goes wrong, and that's it's got to close above 50%. If it closes on it, in this case, you're lucky. Your stop loss didn't get taken. It came back to you, gave you one opportunity to get out before going lower. Now, if that's not a nice, healthy fail-safe for a model that may, majority of the time, work out, and in this case it doesn't, is this the reversal we've got now for the day? So we've got a break-in structure with a body now. See that? Body breaks, it comes back into a CAM 1 reversal model. So here's your CAM model, came back into it. So this is the leg that takes out the consolidation. So you have a CAM 1, a CAM 2, and a CAM 3 model. So I would love to see that come back up into here for a CAM 3 short. Now if you're really quick, you would have caught that for a, oh, well, I was wrong on a CAM 2 entry for a long. Okay, it drove down below. Good. Now this becomes a CAM 1 entry for a short. And you got to be able to change your mind quick. And if you're not, and I didn't see it till like a minute too late already, but if you catch it, if you study this, and this is your CAM models all the time, your brain will pick up on that and say, okay, if I lose this and I run this bottom, it'll become a CAM 1 model, so I'll just take it if it comes back to it this way, and I'll get back on in sync with the market. And I'll start running back down here, and I'll aim for these lows here. That'll offset any losses I may have taken here. Even if I did get a full stop loss taken, and I missed that, I can make that back in that pop up here. You've already made it back by the time you get down here. If you're quick enough and you study this stuff enough to focus on a CAM model entry. I see them, but it's the CAM entries are not my first line that I go to. Again, consolidation here. CAM 1 entry. 2, but see all this, I like this return. I want to see a big return up into here. Premium, you don't want to be getting a discount. You've got all these pockets up here, so I would like to see that drive all the way up, get back into here. Ideally, we want to see this thing close off here. This isn't uncommon for the daily to leave a piece open. Go back through your charts, you'll see. They'll finish that off another time. See how this is like a seek and destroy? They kept going up. They've run all the way through them all now, so we've broken structure to the downside with a body. Ideally, you want to see a quick return back into here. CAM 2, CAM 3. Stop loss 1% up there. It's a Thursday. We're just watching, just reading price, see how these models work, and then as it's working, we can talk about fail safes and how to get out. Right there, we broke even on a model that we're on the wrong side of. How to get out, how to finesse your way out of it real quick if you're wrong. So your same setup here. Anytime you go in, use the same rule. Again, you might have a different rule, but every time I get into a trade, I'll look for that. There's that trade plan that you execute. That when you take your trade, where does it fail for me? Where's my quick fail safe before my stop loss is taken? Your stop loss is just actually is the fail safe. If it slams through and takes you, that's your. ultimate protection, but you got to have a backup plan that says, no, that's going to get taken now. If this goes awry right here, then that I'm going to lose that low. And again, it's all as you analyze price action here, the better and better you get at it, the more you'll realize your fail-safe plan is just as important as your money that comes in. This is the protection of your principal. That is your protection, is your growth. And if you focus on growth, spend 80% of your time on growth, 20% on protection, 20% will save your bacon so much. If you like bacon. If you don't like bacon, then saves your butt, let's say. We won't put a pork product in there. We'll just call it save your ass. So look for a premium array in here now. We have a little premium array up top. We have this inversion up top. We have CAM 3 model. Let's draw a CAM 3 model out here. I'll just draw these lines in here just because, hey, it's fun today. We're not going to be playing around in the markets too much today. We're just going to look, see what kind of reactions we get, and then we'll go for a CAM 2 entry, which is right here. Clone, oops, wrong one. Again, your stop loss is up here 1%. So let's look for how we can how these would be fail safe. So there's CAM 2. You're in a look at your range now and say to yourself, am I happy taking that trade in this range that I'm in? 50%, you're just over 50%, so maybe you want to aim for the higher array, which is in the optimum trade entry of that return back into a premium, right? We also have that inversion, so look for remove. Well, just so those of you who've been studying that CAM model have a bit of an idea of what it is we're looking for. I keep an eye on all these little levels that are premium levels. Stop losses here. Now, here's how you finesse this. So if your 1% is here, so stop loss, and let me just double make sure that you see that. I want to kind of spell it out for you guys. 1% of your account. CAM 1, sorry, CAM 2, CAM 3. How you finesse this CAM 3? If the CAM 3, and look for the that's where my rule now is that once you get the CAM 3, if we close above the CAM 3 like we did with the CAM 2 entry here, if we close above that CAM 3 50%, you're out. We're probably running for the highs. We're probably running back up in here again. And then the finesse side of it is you're still inside this inversion, so you'd have to allow it to come up to here, so you give her a bigger squeeze. And if it closes above that, you're out. Wait for it to pop back. You can either wait for it to pop back in and cut back some of your losses. You're going to take a loss now because you're traded here. If it comes back close to you, you bail out. So we're going to watch that. We're going to try and finesse this right now. So we're watching for this to react off of here. We've hit that 50% mark. So this would be a CAM 3 entry. Mean threshold. Yes, it could react off that. See, I already don't like the fact that it's starting to work past that 50%, but we are inside an inversion, so we can work to the top of it. So if that's 1% loss there, we're going to get out before it gets up there. If we're wrong, where this closes is important. If it's just wicks up in here or wicks do damage, it's the body I'm concerned about. So this is where you don't stress out in your trade. You have a backup plan. You're fail safe. That stop loss shouldn't get hit unless it rips through there. That's my stop loss. That's my protection for those whippy moments. If it just does this little bopping around, that stop loss will never get taken. I'll get out long before that because that's my backup plan. We've closed below. We're getting a swing point, and it's a 5455. So 5558 swing point, logical area that it could do that. I'm all right with that. So now you see that. Now it's tap that. That's it. That's the line in the sand now. I don't want to see it go above that. So here's how we're gonna watch and wait and see what that 13, where it closes now. That's it. I don't want to see it go above that. 3, 2, 1, close. See it there? So now that's my line in the sand. Now I'm looking to get out here. If it either my stop loss is there now, I'd slam it right up against that. Or if it comes back to my opening, bang, I'm out. So that's my loss right there versus 1%. You're less, way less, probably 1/4% you would have lost there. Because now we've closed above and we're looking for higher prices. We have that other array up top still, and we have that breaker. That little tiny candle there. That was an open 16, close 1625, so it's still a bull candle. It's a tiny one. See how it's reacting off of it? Snap. So I want to see that go through there now and start heading higher. So that's how you can see where if I went into my Cam 2 model or Cam 1 model, there's a big 1% loss up there. It wasn't until here you realized, hey, look, my Cam 3 failed. I'm out right there. That's the loss you would have taken on your Cam 1 if you were got early. But again, your leverage is only 1%. It came all the way up into the breaker. That little tiny guy there. And now we're getting a reaction off of it. And you don't look at all these candles going, oh, you were wrong. That thing could turn into a big wick and come right back up. We don't know. So now we got a premium, a discount. There was our 5.5, 5.6 turn point. Right off the breaker. Logical place. So again, that's my rule for getting out. If your stop loss was here and you're still in that, you're profitable right now. So you have to decide what your rule is going to be. Mine is I took a loss. Right now you're in profit if you still put your stop loss there and you have the patience to hold that. If that rolls over now and dives down, you can see that's one reason why my rule for getting out doesn't serve you. It's not 100%, obviously, you can see. That's what I battle with. I always battle with, I don't want to lose my equity. I don't want to take a full 1% hit. So I develop rules around, that's my line in the sand. I've seen so many times it just comes up, taps it, and leaves. Or it just puts a little wick in there and leaves. Not this. But again, if you're looking at logical levels to reach for, a breaker is a logical level to reach for. It's a senior array, albeit tiny. And there's that little inversion we drew out here. It hit it perfectly, cleaned it up, and then just dove away from it. So from the purest form of your Cam 3 entry, there and there, with the finesse part. I finessed you out of a trade. But that's mine. So you develop whatever rules you want around your CAM model. If this ends up panning out, then good for you. I'm happy for you. I'm happy the CAM worked out for you. This is a good thing now. We've traded back through it, come up to it. There's a short there. If you close above here again, then again, look for upside. This is where you're in consolidation, so your opinion will change over and over, looking for inversions to, this is just a fair value gap right now. If that becomes inversion, look for upside. And then I also look for price leg for the next big, huge price leg run up. So we may take out these highs here. So the Thursday reversal, not happening. We had a pullback, and then we had a dip down to this inversion, keeping this intact, pushing for higher prices. But that's a lot of PD arrays away yet. Came back to the mean threshold. Still closing below. We're just studying price action now. Coming back to your CAM 3 entry again. Did your CAM 3 pan out in oil, Dave? Powell is speaking. I guess that might be a rule you have to incorporate into your decision to do a CAM 3 as well. Say, like, is there a news event coming up? That's going to put some serious volatility in this. Do I want to trust going in on my entry now? Again, that's, have that rule, write it down on the side of your, on a page. Develop your own ways to finesse your trade. I would like to see this one pan out just for some clarity on a CAM 3. Because this is all psychological in here now, and so my stop loss would, if you're still in long, stop loss to here as a protection in case that rips up against you. So you cut your loss now. You're still in profit here, banging around. We could get a rollover here now into a, look at the premium and discount range. You're in a premium consolidation right here inside that range. I like the idea that this could be another price leg up. If we roll through here, more than 50% of that on the way down, then consider that a further run down on discount range. Inside here is a yeah, 50% gives us a full fill of that inversion. Is there little imbalances? There's tiny imbalances in here. And yes, price has been known to run to these little areas. They're in discounts. That right there was the long, but you couldn't get in on it because there was nothing there. Come on down. Give this CAM 3 some validation for those poor people. And the CAM 2 model. Your CAM 2 model is in the rawest form. Stop loss here. You're back to either break even or you're this guy's profitable, this guy's was break even. We're dipping into that fair value gap in here. You know, 50% of the range, if you're looking for a discount, 50% sitting in here is your discount array. Premium array, discount array. I think it's going to roll over and come back into this area here. I'm going to put my sights right in here. Irvin, good morning. I am new to this channel and you refer to cam 1, 2, and 3. What are those? By the way, thank you for sharing your knowledge and your time. You're very welcome. We're just talking about a cam 3, cam 2, cam 1 entries right now. If you go to my video on the channel, you'll see it here. Go to the channel, you'll see this one, 3 ways to attack a consolidation, cam 1, 2, and 3. It's in that video right there. That's where you'll find it. So if we don't get the 50% that we're looking for, usually that's a stronger sign for higher prices. I'd like to see a dip down here first before we take that high out. Body's traded above the inversion. It's now an inversion. This was just a reclaimed fair value gap. See how that just wicking up in here? It doesn't drape all the way through it. We don't close on the other side. When you close on the other side of it, it now becomes an inversion. We want to find support for this to continue higher. For that little guy, we're still inside this guy here still. And it's an inversion because we went through it. We came back to it. We went through it, came back through it, came back through it. So this guy here is the overarching one. That little guy inside there, if I pull over here, we'll see how it reacts inside here now. How's your psychology right now in your cam 3 entry? With your 1% sitting up here and your candles bouncing around. Do you have the patience to wait for your exit? Are you talking yourself out of a trade? Now you get to see my psychology. I look for ways to talk myself out of a trade instead of stalking my way into it. It's protecting that capital, right? So you saw me bail out of my cam 3 entry early. So we're still looking for this discount array to get hit before that high gets taken. So keep your eye on the 50% and that consolidation, or sorry, that BISI there. And those of you who are cam 2, cam 3, you're profitable. Cam 2, you just got profitable and you may come back. So you say, discount array, it's been choppy. I wasn't getting the reaction off of it I was hoping for. If it comes back to this discount array, I'll take my profits, move to the sidelines, and wait. Again, we're not trading today. We're just playing with price. And I like this because it gives you an opportunity, gives me an opportunity to kind of practice my fail-safes and make logical decisions to say, well, if I am profitable, I'm going to take that discount array. I don't like the way this is going. We're in a little chat with, or Powell's doing his chat. So there's influence in the market right now. We shouldn't even be in here, but let's play inside here during news events and see if we can still stay on the horse, stay on the bull, or what are we looking for? The bear. We're trying to see if we can wrestle this bear into some profits for a CAM 3 entry. Remember, if you're risking 1% from your run from here to here, just getting a profit out here is less than one. Maybe it's a R1 gain. Ask yourself, do you really want an R1 gain? Do you really want to put yourself under that kind of pressure? You needed it to get down in here to get an R2 or R3. Many things you must consider when you're making your trade plan. So again, we just ran that low out here back into the premium array still. We're still above 50%. We're at a rejection block now of that little swing point right there. Sometimes you don't get your high, you just get the rejection, or get that rejection block there. This candle is now valid. This inversion is now solid because we got to trade above it. That gives more strength for higher. And if it runs back through it, then you say we're back to neutral again and potentially running back down to a discount array. That's how you got to be flexible to change up over and over again. If you're watching a 1 minute chart, it bounces around like that. No different than if this was a daily chart. You'd be like, where am I going right now? Well, I'm looking for support off this order block here. No more than the mean threshold will allow that to come back in here. Today, if this is Thursday right now, and this is high speed playback in your Thursday, it came down, hit your mean or your open of your candle, and it's looking for higher prices. So today we're looking for more upside prices above these old highs, and you just got it. Yay, you just cleaned up your day. So that was the open. We're expecting London to take the low back into this order block, no more than the mean threshold, and then we're looking for higher prices today, right? You see it on the 1 minute chart, you'll see it on an hour, 4 hour, whatever. It's the exact same thing. Oh yeah, the carrot. Thank you, Anthony, for reminding me. The carrot. Let's go with the carrot. That's why it's been wandering aimlessly. It's been looking for a carrot, you see. See, it just needed a little carrot. I remember this lady. I want to give you the nickname Tony. Anthony, you probably get called Tony. I just remember when I was working at a gym, I used to be athletic trainer. And this lady came in. She absolutely loved her husband. His name was Tony. And she used to go, she goes, oh, my Tony bologna macaroni and cheesecake. I just love that guy. It stuck with me. That was when I was in my 20s. And I just laughed. She loved him so much. It was like, Tony bologna, macaroni, and cheesecake. I just love that guy. So you are the new Tony bologna, macaroni, and cheesecake, my friend. You're lucky, Herman. You see your daily candle there? Back on the day when you were calling for this order block to find some support and you're looking for this inversion. Remember that whole couple of weeks that we were sitting in consolidation and you were saying to yourself, dang, I'd like that thing to get out of there. If I find support on top of this, oh, you did, it closed above, great. If we come back into that order block, I'm going long. Either the high or the low, I'm going long. And I'm aiming for these old highs here. So that whole day, you got 2 whole days of running for this high, and you just maxed out 2 days of grabbing money. Don't forget to put your carrot above though, so it knows where to go. I think when I start doing the show, you see my mug in here, I might actually get one of those stuffed carrots and have that holding on. I'll have a stuffed carrot as my mascot with eyes. I have to see if I can find one of those in a novelty store or something. A stuffed carrot with eyes. That'll be our mascot for the ThetaWaveTrader. I'm finding that humorous. I am a junior, so they call my dad Tony, so I just go by Anthony. No, to limit confusion. Junior. Well, that's a good way to go. There you go. Bang! Hit the carrot. See, Junior, all you needed to know was put the carrot. Put the carrot. Now we're reaching for it. See, this was that faker. Fake you out. Now, how many people saw the... if this is the consolidation, we've got a body above it now. Comes back to it. Get higher prices. Now look at that. Right on the beezer. Now would be a really nice time to create a fair value gap in here. I want a fair value gap. What time is it? Deliciousness. So that failure of the CAM 3, you had opportunities if you held it to get out, convince yourself to get out. The fail-safe model worked for me. Now I can say it worked because we just got our 1% taken. So that fail-safe support. So in the end, it did pan out for me. So I want a fair value gap here, and I'm gonna get one. Good. Now I want to see this go ripping right through here. You can come up and tap the carrot. I'll give you the carrot a bit more. Have a little bit of a nibble. Go on in. Have a bit of a nibble. And I want to see you trade right through that. I'm going to put the carrot down here. Come get you some carrot. Call it the fair value gap. What I want to see, I want to see this come through this with a body close. Please and thank you. Come on down for the carrot. So we want to see a body close. Then what are we looking for? My buddy Lauriston be all over this. He's like, oh yes, my setup's coming. It's coming. Close. Okay, so we're waiting. We'll wait for another candle or two to close. We got to get a close below here. A nice body close down here somewhere would be nice. Right near here. Then, my friends, we have ourselves a setup. Do you see the setup? Is Powell still jawboning? I have no idea. He's not affecting the market a hell of a lot. That's all I can tell you. Small but nice silver bullet on the 5-minute chart and the 4-hour fair value gap. Oh, this is what we want. Listen, people. Watch, watch, watch. Yes, come for the carrot. So I go from here and I go sell. I'm just doing a 1. And I'm going to go stop loss right there. Now we want the carrot to kick in here. Watch here. This is going to be your fail safe now. We want to see that close below here and not take out my fail safe. It's not 1%, but it's I'll get rid of that here now. So if that runs through me, I'll take a full loss. If not, I'll wait for this to return to here. Rejection block. This is where you can get a really nasty squeeze here, and then it still pans out. So I'm going to watch this one. We have a break above an old high, fair value gap forms, drop below it, what we're looking for, run back up, get in your trade here. So now I don't want to see it drop below, run above that high. If it does, I'll close out before it does that. So I've got a body above. My usual rule is right here. I'm moving my stop loss to there. So if it comes higher than that again, I'm out, because I've already traded above the inversion. If we can get back to the inversion, I'll take my trade off, or I'll just move my stop loss to right here, because now I don't want to see this if it comes back into that. I don't want to see it. So right now I'm on my eye sitting right here. If I see that run above that high, well, actually I can just stick the stop loss there now. I don't want to see it take that high out again. So I want to see it pull back in here. That's my line in the sand now. I've already traded a body above my inversion, so that's my rule. I'm looking for it to come back down here. Nope, I've already closed above there again. Okay, so their inversion didn't work. Good thing it's demo. Still didn't take that high. Watch it start panning out now. Yeah, bugger. Leave your stop loss there. Again, talk myself out of my trade right there. That rule is not working well for me today. The stop loss 1% would sit there. So now we're traded below it again. Now you're looking at this guy here and that guy there. You don't want to see. I'd like to see that stay open and thus to still be inside this guy right here. These equal highs, it's almost like they don't want to leave those untouched. But you got to stick with the rule now. It's broken below again. Come back, find support at it. And now we're getting our damn run. So we'll look for it to run below here, into a discount array, back into this guy here. Okay, pop back up. Sideline that now. You got a big block forming in here. Neutral, don't know where it's going now. Run these equal highs maybe. Well, we had that all forming in there. It just did not work out the way we wanted it to. Right in the premium array. It was a good call. It was a good call. They're going to shake us off here. Make you think, like, if I try this multiple times to get back in here now, and we're a non-farm payroll week, Thursday. NQ has closed the daily fair value gap and is in the optimum trade entry of the 4-hour chart. Decision made. Scrambled eggs and sausage. Yeah, there you go, Derek. The decision for scrambled eggs and sausage is the way to go. There's triple highs. They're not going to leave those untouched now. So now my eye goes here to the rejection block, which is 18,339. 18,339. So we're up here. That's the potential run higher. I want to show you this idea here so that you don't think I'm being mad when I looked at this thing here as a break above. So if I go back through a bunch of these things here, and I'll show the opposite side of it as well, which is right here. So we've swung below a low. There's that fair value gap. We trade above it, and as soon as we tap onto it again, that's a long. I want to try and show you one that's in the bullish idea here. Right here. See, there's another one. We have a big fair value gap. The moment we trade above it, if we come back to it, get support off it, we go along there. In this case, you wouldn't have got in anyway. I want to give you one that actually works. Right there. See this? We've had this run above these highs, fair value gap, run below it. Watch this one right here. Precision tap. That's what I'm trying to create on a swing high to catch a low. If you don't believe me, we'll do it again. We'll look for another one. Okay, fair value gap. We've done a swing above, come back below it right here. We trade back inside it, right to the tip. Look at that, right there to there. You hit it again, and then you continue for the low here. Same thing here. We run above. We got to get a body above it. You come back inside it here, and then you finally run up higher. See that? That's the spin. When you break out a low, you look for this to check and go higher. Aim for higher highs or a premium array. We have this little tiny fair value gap sitting in here. Body does not get above it. We'd get one above it, but we don't come back into it. Body gets below it. We don't quite come back into it here for low. This one here, you don't get that one either. We have a run above the old highs. We drop down below this little fair value gap here. We trade below it. We tap into it. Tap, tap, tap. Stop loss here. Boom. You got a huge one there. Run above an old high, fair value gap. If we can come back into it, you get short there. Oh, there's Cherish. Yeah, that's when she nailed her and the beers. That's the one we were looking for to go short here yesterday into today's low. That was the entry I was looking for to get short on yesterday. This is the idea right here. See this body trades above here. This one taps it, and then off the races you go. Does it work? Yes, it damn well does. It works awesome. Here, swing point. Takes a while, but we get above it. Trade back inside it. Stop losses down here. tap, tap, tap. We finally get through it here, and then you're running for higher prices like all day. That was the big one yesterday, and it was a silver bullet entry as well right there. That was the perfect day yesterday. So delicious to see. Anyway, hopefully you see the method behind my madness there for a moment. And if it doesn't work out, then have that backup rule to get out of it before it hits your high. Right? Oh, I've got 2 carats here. Does that make sense to you guys? Hopefully that makes sense to you. Order block, wait for the mean threshold. So that's what I was looking for right there. We swung above the high, got that thing there. That's where I was looking. We were calling for this when it happened. I said, I want the fair value gap. Now I want to trade it below. Ooh, get excited, get short. And that's why when it failed, when it went above it, it failed right there. And if you get back into it, get back, there's your fail safe there. Stop losses here, fail safe. If you can get back to your order to get yourself out, which would have been right there, you could have broke even on that trade. And you'd be sidelined short waiting for another one of those setups to happen. And that is a setup that is a freaking bomber, my friends. If it doesn't happen, wait for it, because it'll happen. That's a 1-minute chart, and I showed you multiple entries there. That's less than a week. That's just over a couple of days. So that's a trade plan that works, and this is how you try to get yourself out of it before it hits your stop loss. And yes, you're going to take hits. You're going to take hits. So I love the fact that this is kind of slapping us around a bit here. It gets us a chance to practice doing our fail-safe entries or exits. Do you find that useful at all? Or am I just wasting my time on that? If you find it useful, just give me the old thumbs up. I know I'm cheating. I'm looking for thumbs ups. If it works for you and you like that, then by all means let me know, or just tell me on the side if it works. If it works for you, if it doesn't, and you like it, we can try and work on a different plan. I'm always trying to find a way to refine that and stay in the trade a little longer. My problem is holding trades for a longer period of time, which I'm working for. It's not a problem. It is my challenge. I have to positively mindset that in my head. Okay. Order block, valid, come back, find support. Now, do we get a rollover here? Did we just come up and clean these up? Smooth edges become jagged? Or are we looking for higher prices? Abs, good to see you, man. Awesome call there yesterday, Abs. Is that an inversion fair value gap if it holds? Let's put a 4-hour on here and let's have a look. There's an inversion. Yeah, you want to see it right up to the top there, which is 1323, which is up here. 1323, is that our rejection block on the daily? 1323. What's the open on this candle here? 1336. 1336. Go to the 4-hour. What's the low on that candle? 1315. So it's just before the rejection block. So this is the inversion we're sitting inside right now. Usually you'd expect to see it do the same kind of principle we had earlier. It ran those highs out on the 4-hour. You come back into it right here. So that's the same setup I was just showing you on the 1 minute. So as we trade below with a body, which is right here, you trade back into it right here, and you get short. And you just got your butt handed to you there on a 4-hour. Yeah, I can see the order block here. But if you're looking for lower prices, these equal lows to get taken, and it didn't work, where's your fail safe? There's your fair value gap inversion. So that one there, your fail safe is right here on the 4 hour. So if you were in on that right there and you got short, you want to see it stay below here. So it does. It stays below there, comes back up, trades to it. You'd be like, great. Now if it continues down to the downside, I'm in. So all of a sudden it starts to trade through it, and you go, ooh, not good. Stop loss is there. If you just let it sit, if you're trading on a 4 hour, you got a full 1% loss. If you manage that, if you get in on a 4 hour, and that's your inversion, and you manage it on a 1 hour, or you manage it on a 15-minute or something like that, if it breaks that high on a 15-minute, comes back and taps it, that might be your out before you reach your stop loss. Well, which actually would have been almost close to break even. So your stop loss would be really minimal right there. Actually, no. As soon as it closed above, right here, sorry, I'm not looking at this on the 4 hour. If that's your entry right off there, it's a very tiny stop loss that you put just above that. So you go, okay, so now it's starting to trade down. I like this. This is all good. Breaks through. Oh no, now it closed above. I'm out. So if it starts to run back down to get you in a little bit deeper, great. If it breaks above that high, open again, then you're out. So you're in profit still. You got a tiny bit of profit. So the fail safe would have worked, giving you profit, small bit versus the big chunk you would have lost down there. But you don't cry over that. You'd be happy now that you got out when you did, because your stop loss would have been taken. So it does work. That fail safe does work, even on a 4 hour. A lot of chop here today. Hey, welcome to Thursday non-farm payroll. I think I was asking because the 4 hour had a BISI to the left. A BISI. Yes, right here. That is an inversion. If you draw that all the way across here, that's an inversion that we're entering into now. And you're already going into the mean threshold of that. Right there. The fact that we're not snapping off of that daily high, or the high of that daily fair value gap, and we're just starting to work through it, tells me we're reaching for that rejection block above us here. So it's a long run. Not the reversal. Somebody was saying to you, how do you know that Thursday is the reversal? Somebody asked me that yesterday. How do you know that tomorrow's going to be a reversal? I said, well, it's Thursday. Thursdays are reversal days. Thursday typically is a reversal. And well, albeit it came down and reversed for a little bit, it certainly did. It continued to march up today. So I'm choking on crow right now. I'm eating feathers. It's like I'm eating crow. You'll see. The majority of the time, you'll see a Thursday reversal happen, especially if there's been some good moves on the Tuesday, Wednesday. We did not get our discount raise at all. We did not get 50%. So this is what I was telling you about. If we don't get 50% of our range, and it reacts off of it and continues to break higher, then it's a stronger indication. Remember when I was saying it was a stronger indication to go higher? There's your reason right there. So we come into this fair value gap, but we didn't come down to a discount array. We just tapped down into that fair value gap, not even reaching into a discount array before going higher. We break that high. Again, I don't know the rule for this. Michael mentions it, and if one of you guys can find that on the ICT index AI for how he describes this less than 50%. If it doesn't hit the 50%, I think he mentioned it relatively early ago. Does that make sense? Recently, that's the what's the word I'm looking for. He said that relatively recently, that there was, if we don't get the 50% and we end up taking off, that's a much more bullish indication than not. And this was the price leg I was talking about. I was concerned we might be running into a price leg. Well, there's your price leg from there to there. Carrot sitting right here. That's your next price leg conclusion here. So I saw it, but this, again, where it's really choppy here. It's a sloppy way to get it, but lots of overlapping thoughts going on at this point, but I'm glad at least I mentioned them to you. So if it hits the carrot, then price leg that's not the full finish of it though. But that's that price leg completed there. Carrot done. Boom. All right. Just keep dropping $50 in the account. I'm only concerned when we get into that 1 hour fair value gap on the Monday, March 3rd. Then I'm uncertain. This guy up here. And we're just tapping into that now. Oh, look right here. Let me show you this. This is exactly what we were talking about earlier. Watch this. So we have a high form. We break down below this with a body right here. You never get a chance to get back on it until now. Look at that huge run down. So keep your eyes on that box. Just out of curiosity, keep your eyes on this box right here, which also lines up for this. I want to see what happens in here. It's also, what's this thing here? It's a senior array with a senior array inside it. $8292, 8291, 8290 upside. Just keep your eye on that right now. Just kind of keeping 8292, 8290 right there. Move that along over here somewhere. And then we'll look for that same kind of setup there. And we want to see a break in market structure, ideally to the downside, to give us the indication that we're breaking that way, then we're turning back up into that. Ideally, that would be the nice thing to see. Oh, there's a swing point right there. See that swing? There's the fair value gap. Body trades below it. You get up inside it. Why do we not see this one? That's the setup right there. We're aiming for lows. We got a swing point. We trade below it here, trade back into it here, So 1, 2, 3 would be your entry, stop loss there, aiming for here and here, and it delivered. Then this one is the reversal. It did not deliver because it left. We did not tap back into this with a wick to go higher. But that's the setup I was looking for over here, was it? Right there. So you see these swing points? Look for this. On a swing, get back in it to go short. And again, you got to be nimble. You want to aim for here. You don't want a big ass reversal way down into here. Too many PD arrays away. Take your snipe. Anyway, that's the idea of what I'm looking for. That's my reversal setup idea. Not mine, Michael's. He teaches that. What's the lag today? Let's see. 8. Oops. It's still about 20 seconds behind. So look at your order blocks. Here's your cam models here. Consolidation, break up, come back, cam 1 model running higher. Consolidation, break up above, cam 2 model, cam 1 model, here and here. Perfect cam 2, consolidation. Again, you guys can decide what your consolidations are, but these look pretty clean to me. So that one there is return. So when you got the model on top of a model, you got 1 and 2. You don't quite get 1 here, but you're definitely in your cam models. If that other one's failing miserably here, your cam models right now, we're in a 1 minute chart, and less than an hour you've seen 1 and 2 right here. This one failed, that cam 3 model failed, but we got out of that right away, and we found a way. You can actually, if you were brave enough to hold that, wait for it to return to you, and you have your high set as your fail-safe from that point when it failed, and then you get back to your break even and get out. Your fail-safe worked for your cam 3 failure, your cam, and even your cam 2 failure, you had a chance to get back to break even. But your cam, the moment it breaks up here, cam 1 tap here, cam 1 tap, we broke above it, so you're in it here, 1 midpoint right here, 2. So let's draw that out. You'll see how close that is. All right, here, that is your consolidation, 50% right there. You wick down to 62. I don't use a fib tool on that. I just use the 50% model. We did not close a candle below it, so there's no reason to go into your fail-safe. Stop losses here. You want it to get through this order block here, mean threshold, came down inside the fair value gap one more time, and then you broke through the mean threshold here on the upside, then continuation. And if you're a cam 3 model pro and you've developed your rules around it, Excuse me. If you're a Cam 3, Cam 2, or a Cam model trader, you're killing it today. While the rest of us are getting beat up, the Cam model people are still making money. And we're just short of the objective there at 292 or 290. We're not done yet though. We'd have to break this structure to the downside with a bold candle before you consider that starting to reverse. And now we're coming up for 11 o'clock. Remember, 11 o'clock is where we start to get the turn for the whole morning session. Look for a 50 to 62% retracement from 11 o'clock to 11:30-ish. Somewhere in there you'll start to see a return. So this to me looks like it's winding up. We're just out to start the macro for 10. Oh, we're just starting it now. Macro begins, so we could see that one more run up in here. Look for this guy here. That will be an optimum time to turn around and start coming back down, I think. So there's some confluences in here that make me go, oh, I wonder if that's going to be our return back down into this area. Lots of PD arrays. That's just, I wonder, not that I'm saying it's what it's going to do. Workout Warrior, welcome. You're new. What are the second and third cam models? I've only heard of the one. Well, my friend, you go to our website here or our channel and you'll see it all described in there. There's just a 30-minute video talks about all the cam 1, 2, 3 models that you can find. These are all cam 1, cam 2 models. There's no cam 3 in here. This was the cam 3 model right here. Again, just go into the video, you'll see it describes it for. And then come here and I'll show you how to finesse your way out of it. And you decide whether or not that's a method that works for you or you want to hone it. If you come up with better skills, that's what the community is about. Share it. If you've got a better way of managing it, it's not going to hurt anybody else if you share it. The markets won't crash because you've shared it with 1,000, 10,000, or 1,000,000 people. That one little safeguard. People want to tend to hoard their little secrets and stuff. I'm here to share everything I got. Fail or not, I'm here to share it. You guys can do whatever you like with it. I'm not giving you trade advice. I'm just giving you ideas. And if it hones your skills and you get a little better, or it makes your trading that much better, I'm happy. I've done my job. I've done what my purpose in life is, to help people. And if it doesn't help you and you don't like it, that's what you have, a mouse button. You just click exit and move on to something that suits your needs. That's the simplicity of life. So simple. But if you find something that works for you, share it with us. I'd love to know if you can find a way to refine that fail-safe on a cam model. Pop into the Telegram chat group and share it with us. I would love to hear it because I'll give you the credit for it if you want. And if it's significance you're after, I will share it, put your name up in big bold letters right here on the screen saying you came up with it. Help each other out. That's what I'm here for. Awesome. Will do. Thank you. You're welcome, my friend. You're welcome. I know I feel the same way about her. I'm not greedy, LOL. I'll share. Workout Warrior. You're in my good books. Thank you, sir. Thank you. Or young lady. If you're a Workout Warrior lady, thank you. Oh, the love. Look at the love coming. Oh, sending some love back. It's coming at you. Tesla. I'm a cam model. I'm a cam model kind of girl. All right. Cam is taking me on a date today. All right, so we have another reversal. Return back to the cam model. Look for the inversion. Tippy tappy, your stop loss is down here if you're going for a cam 2 here. We're coming back to tap the daily fair value gap. We don't have one of those funky little reversal spots with the inversions on it. So methinks we have more upside. Look at you little cam people jumping in on a trade. We're not taking trades today. But if you're a cam model kind of thinker, you have from here to here, this cam here, or if you're a little more conservative with your consolidations, look right here. %50 will put you right here. Cam model 1 and 2, stop loss here, little less a 1%. A little less a half an hour. What movie was that from? I do not think you could speed things up. I could lower the rope, but I'm only waiting around to kill you. I do not suppose you could speed things up. I don't know why that's popped into my head. You all remember the movie? Dave wins the prize. Inigo Montoya. I remember going to one of those shows once. They were showing in a movie theater, they were showing old classics. It was amazing how many people turned up for The Princess Bride, and how many. I look around the crowd and everybody is mimicking the words. I don't think anybody really heard the movie because we were all saying the words. Hello, my name is Inigo Montoya. You killed my father. Prepare to die. And he really loved saying that, like he'd rehearsed it for years and years. And it's commedia dell'arte. It's like what we were studying in acting. And it's that almost like a slapstick humor. It's obvious and funny. It was Rob Reiner did such an amazing job of putting that movie together. It is by far my most favorite movie. There's so much humor in that. And if you look carefully, when the rodents of unusual size, the ROUSs, the rodents of unusual size that attack them in the thing. You see that one guy? If you look carefully, you'll see a guy. He attacks the guy, and then he whacks him with his stick and almost knocks his head off. And you see the actor inside the suit grab his head and pull it back on. It's actually in the movie. You see him hold his head and pull it back on. You watch carefully. It's hilarious. Inigo Montoya, yes indeed. See how support, you're banging off that support on a close. You dip into a CAM 1 model, we're into this fair value gap here. We've popped back up above it, and we're finding support at it. So I'd like to see that go into a premium array now inside the small range. Look for a premium array up here. And if you're really trying to snipe short, you're trying to get a little bit of a quick return on your money. If your stop loss is down here, if it breaks 50% of the range you're in here, I'd slam that up to break even. Or I'd slam it up to the bottom of that thing there in case it turns against you, because this could be the next price leg down. And if it is, it's coming for your stop loss. Bouncing off of it again. That's a nice snap. Rubber band snap. Oh my God, I saw this video. I just said snap, rubber band. My brain just ripped off to a movie inside my head. I watched this dog take these rubber bands. This lady has all these balloons laid up on this bed. I wish I could show you the video. It's hilarious. This dog puts his front feet up on the bed, and there's these balloons, 3 balloons sitting on the bed with 3 rubber bands sitting in front of him. The dog grabs the rubber band, hooks the rubber band around his toenail on his front foot, and he pulls it back, and wham, and he nails this balloon. Then he moves to the next one. He grabs the balloon, grabs it, hooks it over his toenail, pulls back, wham, and he hops over to the next one. It is hilarious to see it. Like, this dog's like, I could totally take that balloon out with this rubber band. You can almost see his mind going, yeah, nailed that one. Where's the next one? It's those happy moments just make you smile. So what's your fail-safe for your CAM model here? So let's work on a fail versus a pass. A pass, we'd be looking for a premium array, get out above your premium array. Or if you're aiming for higher, remember, we're really trying to squeeze the juice out of an orange here. We're trying to get the maximum potential that we could be going higher here just to make a new high. So you're really trying to juice it out. So if you want to just quickly grab yourself some profits, look inside the range you're in. If you just hit a premium and it rolls over and comes back down again off of here or here, then you'll curse that you didn't take out profits when you could for some quick ducats. Not that you're trading this, because it's a Thursday non-farm payroll. I like to see these little probes down. Those are good. I want to see that lift up now. I want to start getting a drive above it. Maybe it just needs a little motivation. As soon as he gets a sniff of carrot, boy, let me tell you. He's saying, you're only going to pull it away from me anyway, so maybe I'm not going to come for it. Like, come on, it's right there. I'll let you feast. Go ahead. Have a nibble. What's your favorite array to determine market structure shifts? Well, I do like you'll see me trade on the 1 minute here. You'll see the inversion. When we break through an inversion, come to the other side, I'm automatically bearish. If we break through the other side, come back and find support, I'm automatically go bullish. So in these 1 minute charts, you'll see me go bullish, bearish all the time, because I guarantee you that the trend that continues is off of that inversion. Now, the old thing I used to do is if I see a bold candle get below a swing point, a significant swing point, not just any swing point, but a significant swing point, and come back to it, I'd find that, and create a fair value gap there, trade back inside the fair value gap off of a breaker, then I'd say, yeah, that was my, like a break in market structure would be something like this breaker here. If we have a big bold candle get down below this, create a fair value gap, trade back up inside that, then get short. That's the 2022 model, and that would be a break-in structure, so to speak. So I look for these fair value gaps. I look for senior, I call them senior arrays. They're the strongest ones, like breakers, fair value gaps that turn into inversions. They become senior arrays. And I will look for the next discount array that supports whatever range I'm in. And I go, okay, that's the range I have to play in now. Then what's sitting in this thing that's in a like array that is similar to the one I just took out in the premium? Is there a similar array or like array in the discount range? And if there is, that's where I start to target for. And you can either take a portion off there, or I wait to see how it reacts off of that. And do I continue to get these inversions providing me support on the way down? See, now this is the kind of the premium array you're looking for your CAM model. So you're in profit right here for your CAM 1 entry. You're now over your 50% for your range. Here's your range high, your range low. There's 50%. Scale out a piece there. It's small, but hey, what the hell? Stop loss here would be slammed right up against break even. Now, I wouldn't even. Right there, break even is zero stress trade. If you, two ways you can manage this: zero stress. If it comes back, takes you out, who cares? You just had some fun in the market with no stress. Premium array. If it hits my premium array from there to there now, no problems. I'll haul out a piece right here. And I'm happy to do so because it's in a premium array. We have a discount array now, and we have a premium array. So if we turns into a fair value gap, pop in, run up to here. That's like a silver bullet run for here, because we're now at 11 o'clock. Then we're looking for, if this high is made, I'm looking for that retracement to come back into that range, 50 to 70 or 62%. And that is just one way I look at it. There's many, many ways to manage this. As you can see, mine is more based in fear and the psychology of running it out. See, there's your 50%. If that turns around and runs all the way through you now, you're going to be like, why didn't I scale out 50%? I'm in a small range, end of the day or end of a morning session. Why didn't I take a small portion off there, move to break even and say, I paid the trader? You put some money in your pocket and some monopoly money, some demo money to take your wife out on a special night tonight. Take her out with them sweet looking demo dollars. It may only be $100, but it's $100 better in your pocket than $100 on a stop loss taken. And right now this still feels like it's upside, so I'd be in break even and say, even if it comes back against me, I'm all right, because that's a consolidation now. That's another CAM 1 model entry. We've traded above it right there. CAM 1, looking for higher prices, looking for a run above this old high here. That's a CAM 1 entry. We had a CAM 1 entry here and a CAM 1 entry here, right there. Not quite a CAM 2. I think that would have been a CAM 2 right there. If it came all the way down to here, that'd be CAM 2. But that's just a CAM 1 on top of a CAM 1. Looking for that old high right there. The first CAM 1 is a break even. You nibbled off a piece here, and now you're break even. Now you're just doing another trade again as another CAM 1 entry. Your stop loss is sitting right down in here. So the profits you made off your first one offset the losses you would possibly take on this one here. And if it keeps going the way you're going, you CAM people have nailed an awesome day today. And you had an awesome way of getting out of a trade. Because it's your rule, your fail-safe rule. How many of you guys trade with a fail-safe rule? Give me a thumbs up on the side there. You don't have to go for the thumbs up in the middle. The thumbs up on the side, how many of you trade with a fail-safe rule? Not just a stop loss, but a fail-safe. Like you watch, if this point fails, I'm out before my stop loss is taken. And how often does that work in your favor and save you? Just give me a thumbs up if you got that. If you don't, that's fine too. But that's what I encourage you to work on. Save your principal. And it's not based out of fear. It's based out of a logical trade plan that has you're either a front-end trader or you're a back-end trader or you're both. So in other words, a front-end trader would just say, I'm aiming for that, and if it hit it, great. If I don't, it takes my stop loss, I'm out. I don't care. Back-end would be, I want to trade that, I want to just let it keep going, and I'm just going to watch the back end. And my fail-safe moves to the next one. Fail-safe moves to the next one. So I trade based on a fail-safe and not on an objective. And then the one who trades both says, I'm aiming for here, and I'm managing it from the back end, because if I don't get my objective, my back end is going to save me. That's the difference between all three. So now you're up in a premium array right off that breaker, or sorry, that order block right here. So that would be another scale out point for the first one. Your second one is already in profit now from your CAM 1 entry on this guy. He's in profit, so take a piece off there like you did for this guy in the 50. Take some off there for that guy and move him to break even. So now both of them are break even, and I would probably move my first one to this guy here as a swing point, and my second one I'd be slammed up against break even wherever that was. Well, no, I put that right here too. So you're just short of this one's in profit already. You've scaled out once, twice, reaching for that. This one here, you've entered in right there. You scaled out a portion there. Stop loss is right below your entry. So you're not even down in the low there anymore. You're up here. Again, it's a real tight little range. So protect, protect, protect. And I know none of you are trading this right now. You're all just sitting there watching this and saying, this is interesting. We've got a fail-safe model now. Because if this turns around off that order block right there and comes all the way back down into the discount array, because we're talking about the discount array when it was forming, I said this is discount, that's premium. What do? We came back into discount, and then we ran all the way up into premium. Minute by minute, folks. If that was a daily chart and you saw that, you'd be like, I'm all over this. So Monday, Tuesday, Wednesday, Thursday, I'm out. Thursday's reversal. Thursday's reversal candle. And then Friday, and we're seeing coming all the way back in here, and you're going to say, damn, I should have scaled out there. And your stop loss is now broke even. Those of you who did not scale out there took a loss, or took your break even. This guy that was in this one here, or the lady that was in this one here, took some profits really quick there. And if you got 1% of your account, believe me, that's probably hundreds of dollars. Like hundreds, $500-600, that just from that run from your entry here to that guy right there. And we're talking precision, folks. Like, oh man, now you've run back into order block. Snap off of that. Run back up higher, aiming for that carrot. Did we put the carrot too far away? Should we tempt him a little further? But we have this discount array again to run into. So you want this inversion to hold, and you want this inversion to let go. So you're in inversion and inversion, premium, discount. You're in that range. So you're going to see this consolidation get tighter and tighter and tighter, because one of these two have to give up the ghost to go higher or lower. So that's when you go, I'm neutral. While I milked money out of that consolidation in a market that is tight, consolidated, I got precision exits, and I'm now stuck in between these two. So now neither one of them are going to pay me any major dividends. So now I'm out, move to the sidelines and wait. Watch this one to give way. Watch this one to give way. Does that make sense? I hope that makes sense to you guys. Do you ever trade day, brother? Do you trade every day, brother? Yes, I do. I trade every day. Well, I don't trade live every day, but I'm live here with you in the charts, reading price action with you every day. And that's what a lot of people should be focusing on, not whether or not I make trades or whether I make money, but I show you how to read price action. What I do on the sidelines here with my own live trade chart, that should not concern you at all. I hear people, I saw a guy that was bashing ICT the other day, figured he was calling out a faker. He knew this guy was bullshit for, 3 months. And I thought, wow, you think that ICT's principles are bullshit? This is amazing. So I started watching it, but I hate negativity. So I was like, you know what? I was watching some of the words he was saying. It's like, I've proven that he doesn't know what he's doing. He's not making any money. He never shows his account. If you think that someone has to show you their balance sheet to prove what I'm showing you here with absolute precision, if this is not convincing enough to you, and that my balance sheet on my checkbook is more convincing to you that this, what you're seeing here, is real, then you're hallucinating. You're absolutely hallucinating, and this is not the place for you. Because you're looking for the wrong thing to validate a trade. My success is not your success. What I see what I'm showing you here does not disprove or approve of my money that I make in my account. That shouldn't even be entering into your mind. Yeah, what's his bank account? But what's he got? Who gives a crap what I got? If this isn't convincing enough to you, then my spreadsheet won't convince you in the end either. Because there's plenty of people on there that will love to show you their little luxury cars and homes and stuff like that, and you'll go, great, how do you do that? Then you have to get back into the bullshit, which is this, which is studying price action. So anyway, I got quite annoyed by that. I thought, how shallow can you possibly be that you evaluate a guy who's put thousands of his hours in there, spent countless time trying to share his knowledge with people, and you look for his spreadsheet and you look for anything to validate his spreadsheet just to get clicks, to get people that, and you got 300 and some odd thousand people watch that. I thought, ugh, I'm not even going to give you a click on that. I just looked at the kind of some of the words that were being on the screen as the preview for it. It's like, I'm not even going to click you, man. That's so, I don't even like your premise for calling them out. Like in this chart here, and I'm going to rant for a little mini rant here for a few seconds. If what I'm showing you on a 1 minute chart, you would know that it's BS if within half an hour you would know I was full of crap if this wasn't working out. But we're giving you precision, precision, precision. Every candle, what we're looking for, arrays we're looking for on a minute by minute. And if it was wrong, I wouldn't be doing this for 6 months already. And none of you guys would be in here. You go, that guy has no idea what he's talking about. But we're watching every candle and it's producing what we're looking for every minute. You need to turn that into your success. I want that for you. I really want that for you. Anyway, that's my rant. Don't let people influence you to believe something. Prove it, show it. Not speculate on stupid money, how much money someone's got. Forget the money. Read the charts. Get good at reading charts. The money stuff will come. Ooh, not trying to live stream. Hello from Singapore. Vittorio! Good morning, good morning. Or good afternoon, evening over there. Nice to see the calls earlier in the Telegram. Yeah, it was awesome to see you guys in there having a chat. I like the people sharing some ideas in there. That's excellent. Learning it. Hi, a thumbs up. Number one, great work calling on the macro to be continuation. Wasn't sure though where it would start. The better question is, do you make good chicken masala? Oh, John, chicken tikka masala. Ooh, I love a good curry, a good Indian curry. Ooh, a chicken tikka masala. Ooh, you've got my taste buds fired up now, John. Thank you. Do you guys have good chicken tikka masala recipes? I went to an authentic Indian curry restaurant and got a chicken tikka masala. Oh my God, it was like magic. It was like magic in your mouth. It was amazing. Warrior, no, I meant live stream. LOX, thanks for managing live stream. Yeah, I trade live stream, but I won't show you my live stream trades. Like if you see me trade on here and it's a really solid trade, I'm probably trading it over on my live account. But I can't give you any financial advice. I can't trade for you in front of you because it's illegal. It's like offering financial advice and someone's going to ding me for it. So I'm not even going to enter that. It's all demo dollars here. We're demo balling it, demo player. I'm just a player. I'm just demo balling in front of you. That's all I'm doing. I'm just playing the demo, playing with Monopoly money. That's all I'm going to suggest you do. What you do with your live money is entirely up to you. Read the charts and make your decisions based on that. I want to show you what I see, and if it helps you see your stuff clearer, then I'm happy for you. See what I mean by consolidation? We have low, high, and then we're stuck between that array and this array. See how we come down, tap it again, discount array, premium array. See how we're just going boom, boom. We're stuck in here in the middle of it now. It's getting smaller and smaller. It's compressing. The algo is going, I got nowhere else to go. I got to break out of here. Boof, boof. It's either going to go up or down. Make your mind. Look, it's going, I don't know where to go. I'm like a little rat caught in the corner. I have no idea. Well, that's good. We've seen you run out of arrays. So now you got to make your move, buddy. You're high, you're low. You've got overlapping candles. That's your upside candle, your downside candle. You just popped above it. So those two candles, you're overlapping and you're stuck now. You're like, oh, where am I going to go? I'm in the premium of this array. I got to stretch down here for this guy. Or I've got to pop up above that guy into the discount, or we got into the rejection block already. I either drive up high above this guy or the 50% of that wick, or I need to start getting back into this discount area. I'm up in the higher premium array of that range right there. I'm in the premium portion of it. So I'm either going to continue to extend, or I have to drop down into a discount array and then extend higher. So watch this discount array one more time, because we're still sitting inside that guy. I'll draw them out so you guys get an idea of when I look for an array and I'm inside a range, I look for like arrays. Like array to like array. You'll hear me say that so many times. Like array to like array. And here's a real screamer for you. This will make you feel good. Look here. Where's the premium? Where's the discount? Where's the mean threshold? Boom, boom, off the mean threshold. Finding support off of that inversion there. Ding, 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 ding. Found support. We're coming up to this guy. Now we busted up above it. We're coming into rejection. 50% of the wick we talked about. Right there. Now, running through it, or are we coming back into a discount array? Run back down into here. This order block's mean threshold. Do we find support at this and start pushing higher? We want to go higher because we're looking for higher objectives. But nothing in here tells me we're going bearish yet. We haven't broken any structure to the downside. If anything, we continue to break structure to the upside, right? We break structure to the, we'll continue breaking it to the upside. Nothing significant on the downside yet. Hopefully that makes sense. FYI, I just saw the Powell is still testifying before. Derek, you always crack me up. He's testifying. Oh man, not a big deal. Wanted to let you know if there's any questions. 11:15 a.m. I am noting the divergence in SMT between ES and NQ right now. Okay, give me another rundown on this ES NQ. Which one motivates the other, Derek? Like which one drives the other to move? And I have to go back over that SMT thing. You figure I would have sat and spent more time on SMT divergence, but that I don't. Paul, is it in the iMan Fellow on YouTube? Is that iMan Fellow on YouTube? I saw that and gave it a thumbs up. These concepts work, and that's all we need to know. Yeah, that's the guy, the iMan guy. The precision is self-evident to anyone who tries his concepts. Yeah, the iMan guy. I looked at that one. Moron. Has no idea what he's talking about. But he's got 300,000 views. I'm like, here we are working the charts, working it live, right in front of you, proving it out. And that moron gets 300,000 views. He is just looking for clicks. Yeah, I totally agree. John Doe, if you asked my wife, she would say my chicken masala is awesome. Ooh, I hear the gauntlet has been dropped. Derek's dropping scrambled eggs and sausages. He's up there now trash talking tikka masala. So you see how it ran out of arrays and had to bust out of there? So we're starting to go up, come back, find support. Look at that, right into the mean threshold, tippy tap, and off to the races we go. Love it. Looking for higher prices. Put that in your pipe, Mr. Iman, and smoke it. Michael's got so popular that slandering him will make you money. Yeah. You know, there's always going to be naysayers, all looking for someone. People that are drawn to negativity, I've got no time for that. That's drama. They're wrapped up in drama. Let the drama go, man. Focus on the material. People want things fast, and I want it done now. Nobody wants to put the time and effort in anymore. I didn't get to where I am, and I was at zero. I knew nothing. Zero about what those things stood for. And this is me 7 years later. And believe me, I've lost thousands, more money than I've made back. Let me put it to you that way. I'm just getting my stride now. That's only because I'm 58. All of you young pups who got smart minds, I deal with ADHD. I'm all over the place. But when I focus on something, I can hyper-focus. Hence the reason I really enjoyed doing my paramedic stuff. 100 things happen, flying at me once at a call. I loved it. The more chaos it was, the more fun it was. Just more stuff. You do this, you do this. You have 10 people. You direct 10 people to do 10 things, and then you've got 10 more things ready for them the moment they pause. Tons of fun. Michael's so popular with slandering people. Okay, what was the first thing I made from my wife 27 years ago? I own 2 Italian restaurants. Yeah, there you go, John. Slap it down, my friend. That was the first thing he made for his wife 27 years ago. Tikka masala. What do you say to that, Derek? Did you make your wife chicken tikka masala 27 years ago? We'll have to compare recipes. Absolutely. Just let you guys know, triple watching next week and roll over for the most futures products are starting to come into effect. Ooh, thanks for that, John. Right now it's NVDA moving the market. No kidding. They make more money than Canada. The whole gross domestic product of Canada, that one company, that's how much money they make. Eek. They're drivers. I tell you, this is the futures market to be in is NASDAQ. With the AI driving the markets, this is the place to be. I see nothing but upside to this. We may get some little retracements, but you're going to see the whole NASDAQ market just explode as AI starts to move into more and more markets. The overall bias for NASDAQ right here, we're heading for my objective. I called this weeks ago. That's where we're going. I think we're going there. I know people say you can't predict that. Those who are new, I will show you again how I got that level. And it's not a solid level by any stretch, but so far, since I called that level, we've done nothing but move up towards it. So I just want that'd be an awesome validation if that hits. I'll just sit there. I'll be peacocking around here. Okie dokie. Here we're coming. Get your carrot. There's the 90. That's the bottom of that that candle we talked about over here. It's also the bottom of that 1 hour fair value gap that Derek's looking at. Right on the beezer. Now, ideally, I'd like to see that go, start coming back here. Neither with the sidekick of Meta. Yes, Meta. Meta. I don't know how you guys feel about Meta. That whole concept, when he first came out with that concept, I went, oh my goodness, this is terrible. Terrible idea. Here's the swing point. That's our setup now. We want to get a body below this. And once again, we shall try to get our swing point at a key level we're looking for. Right off that area I was telling you about. This is what we're looking for. We called this an hour ago almost. This is what we're looking for. Body. Oh yes, come for the carrot. Watch this close. Yes, yes, come to eat. Come to eat carrot. This is what we called right here. That delicious one we mentioned way over there. Watch that. And we're looking for this setup off of that time. No, come down. Don't go back up. Dang rabbit. And it's still not below it. We're in a range here. We want a discount range. Run all the way down here. Don't even give me that yet. Run all the way down here into this discount range with big bold candles, please. And then freeze it up, turn around, and then come back up, grab that, and then slam her down. How's that? That's kind of like the idea I'm looking for. And there, nice and straight. Okay, where are we at? 17 seconds. Come on back. Oh, look at that. It's still closing above. Can you believe that? Look for an hour to take out the highs or lows. It's the body below. I don't like the wicks. I'm going to wait. See, this is where it goes, ha, sucker, and takes off on you. And that's the entry right there. Oh, it hasn't hit it yet. So here's how you get your break even. You say, I want the highest probability with the lowest risk. Then you put your buy order in right there, so that if it violates it with the body, comes back and taps it again, you get even, and you break even and you go out, and your trade is nullified at no loss, maybe the cost of your trade. That's it, instead of a big loss, provided it doesn't shoot straight through your fail-safe. If that makes any sense. I'm going to go to the bathroom. That's when it starts to run. I'll be right back. If Laurie was in here, he'd be doing dishes right now. put a chart on Telegram chat. Okay, I haven't seen that one yet. I make the emerald lasagna version. When I knew she was the one, I broke out the chicken masala to seal the deal. Been married now. Oh, you're using the masala to entice her. Smart guy. 6 years. Boom. Good for you. I've been going out with my girl for we think it's 9 years. Maybe almost 10 years. No, at least 9 years. I haven't asked her to marry me yet, but we consider ourselves married. I call her my wife. She calls me a husband. So when I actually decide to get married, we'll do a video so you can all see this get married. You're all invited. I'm 58, never been married, but I've got this awesome lady now. I like it. Ellen Acosta. Buenos dias. Buenas tardes. You're probably buenas tardes over there. Dow is melting. Dow is melting. Did we call more downside for Dow? Oh yes, this is the one where we said, here's that setup we've been talking about on the daily. See the swing above the high? See that fair value gap right there? We trade, a body goes below it right here, trade back up inside it, and get short. Running for these lows. That's the ideal. But again, your stop loss has to be there. So it's a huge stop loss on a daily. Whatever 1% is, you might be trading. You have to be on a micro, trading micros with that, unless you're like multi-millionaire and you can put one lot up there and ride that down for 1%. And your first ride is checkpoint here, here, and then here. Okay, so now we're back into that. So now we're going to watch to see if this inversion, which is that setup I just pointed out over there, right here, now that we've taken this high out and we've hit that same thing over here. This is like triple example of what this is. The one I just showed you on the Dow Jones and this one right here. They're all overlapping, looking for that one delicious little setup. So we'll see if this works. And then we'll go to the failure that I was mentioning earlier. So let's say this is our entry. So we're going to practice doing our exit here. If we're wrong. Boom. We're entered in. We've closed above, get out. So we're in and out right away. It closed above. That's my rule anyway. And here's where you have to try and say, oh, give it some room, Darren. Let it breathe. Let it breathe. Don't go straight out right away because it's your rule. You could let it breathe right in here, up to here. So stop loss would be right there. So let me just revisit, because it's pretend and we're just playing here. Let's alter our rule and say this. So that was our entrance. If we break this high here, then we'll say we're out. Then we got to hope that it trades back into that order block there to convince us. So this mean threshold, ideally, we do not want to see it trade above that. So we've got two different rules we can play. We're just kind of finessing the rule now, see what happens. If this rolls over and comes back down now, that's how we can finesse that. We're close to a PD array that is this range. That PD array supports price. We should see that roll over and come back down into the discount array. Like array to like array. Like we were talking about over here. Same thing here and here. You look for those arrays that are similar and it trades from one to the other. Now our favorite senator, Elizabeth Warren, is reading Powell the Riot Act. She is a piece of work. Derek and I are doing the catering. This is excellent. We need to set up a retreat where we can all go and meet up at a retreat. Once we all make some killer cash here, we'll do a big retreat. Derek can do the breakfast with his catering, for the catering for scrambled eggs and sausage. And lunch, tikka masala with John. Maybe some pizza. Ooh, I feel it. And then we'll all bring our laptops, sit in a room and just talk trading all day long. That'll be awesome. Just meet at a hotel, just get a boardroom, have some fellowship, everybody meet up, have a laugh, have a good old time, do some trading, talk some stuff, see how everybody's doing. Wouldn't that be an awesome thing to do? We all kind of meet up in a year or two, talk about your trading, talk about how it's affected your life, and then we could have a special guest speaker like ICT maybe. Maybe ICT will like to join us, you know? All right. So we closed above it, get out right there. So it doesn't get your stop loss. So we like the original rule. It traded above, we got out right away. Stop loss is going to get hit. So we'll stick with the original rule. I like it. Bang! See, it would have taken us out. So we're in and out right away, hoping to catch that run on the run down. It didn't work. Well, it didn't cost us anything either, so we're good. But see, we're getting in on some. We got that right at the high of that because we wanted that to come to us, right? It came to us, went above us, rule out, took us out from above, come back in, gave us our exit. But I tell you, if we would have caught that and that would have turned around and booked it down, you'd be like, I caught the most perfect trade today. That's what we're looking for, is that perfect trades anywhere inside here. If you took it down here, you took a loss right at that open and close right there. You took the distance. If you trade it as close to you can to the top, you may not get those ones where they just pop in, tap them, and go. That's fine. But if you want, I want my last chance, because if I'm wrong, I want to be able to get out right away as soon as it trades above me. And if you did get in down here, or so you put in your order up here, and it didn't come to you. Let's say it didn't come to you. It stopped right here, and the person who was in the middle said, that's where I've got my one. There's 3 different places you can put it. But you decide, I'm not in. The moment it trades below and comes back to it, put your order in there. Stop loss would go just above you and get low, because now you're using that to leverage you again. And again, you're looking for that. If it trades above, comes back to, you're only taking that small stop loss instead of the big one way up there. Fail safe. Have a fail safe, folks. Don't just rely on your stop loss. How many times have you, for example, looked at a trade and you see it going against you, go, ugh, that's going to take my stop loss. That's your brain having picked your fail-safe already, and that feeling that's coming over you going, I'm going to get my stop loss taken, and sure enough, poof, it takes you. I knew it. Where did you first get that feeling? Where did you first get that? That's your brain trying to say, I see something here that doesn't feel right. Now, you have to identify whether that's fear or whether it's something like this, where you go, nope, that popped above. I think the high is going to get taken. Sure enough, it did. Fail-safe versus full loss. Because if you're like in this, like, yeah, I'm going to get it. Why did it fail again? It took another huge hit. Or you took nothing for a hit. You just said, okay, if I'm wrong, that's what I'm hoping for, that it doesn't run out and take me right away. That's my, stop loss. Real stop loss. Fail-safe is like, if I can get out of that early because I know it's going to go up. Because it's a senior array that you find support at to go higher. It's a senior array you find support at to go lower. So now we're neutral. Buenas tardes. Love the idea. South Florida, I know a good spot. Costa Rica, 2 months, 2 years. Sheesh, I can make a killer Neapolitan pizza. Dave pulling out the Neapolitan pizzas. John, you're hired. Dave, I'm in. I also have a few connections in Costa Rica. Oh my goodness, now you're talking my language. You're talking some diving sites here too. I love it. I love it. Anyway, that's a nice little dream. Let's get everybody there. Let's get everybody to the point where they can do that. So we run a high, discount array, order block, breaker, senior array, fair value gap. And we also have a senior array that we're sitting inside right here. Discount array, see how we've reached down to discount, also into the breakers open. Run back up, we've got a higher array above you, so we have a senior array above. Now we've come back, closed below it, and we've got this a senior array here as well, and it's a premium discount. This used to be premium and this was discount. Now this is discount and that's premium because this is our new range, premium discount. So look for it to run back here inside this guy, inside order block. It still can give us some support. All the way down into the mean threshold is the rejection block. So look for it to bang around inside here. We'll start to do one of those, I'm running out of arrays, getting tiny. Now I've got to break out somewhere. Welcome to the world of consolidation, people. But keep trying to picture this like it's a daily set of candles. Keep looking at the range you're in. What like array can we trade from like to like? And is there one right there? No, there's not one there. So this guy here is now a premium range, and this one is now the discount range. So if I go all the way over to here, and I go over here, and then I go, keep your eyes on those other ones too. I don't want to write them off too quickly. Look at the range, pull your fib tool from here to here. 50%, so premium array, discount array. See that right above the 50-50? We hit the premium, we hit the discount. So we went from range, discount, back to premium. Oh, where to go next? And this happens over and over and over again, my friends. When you see them, you say, yep, I see you. So now this has been fully filled on a wick. This one has not been fully filled on a wick. So now say we'd do a nice little dip down into our discount array, go over quite well. Breaker, holding price, back to not a breaker. Senior chess piece, minor chess piece, queen, pawn, or king, pawn, or rook, bishop, whatever you want. So look right here. I'll put my crosshairs right there because there is a tiny, tiny imbalance there. It would not look so tiny if I stretched it out, but you get the idea. We'll see if it runs up to this. That's a nice little premium. Then it will have an idea to run down and right to the rest of that discount array below us there. So watch the crosshairs. That's right on the bottom of it. I've got it on the top part of it. Now you want to see it pop off of there. Looking at the mean threshold now. Or the rejection block, if it reaches to that. So now I'm going, okay, you're really reaching for the higher part, the higher PD arrays. So we went through this guy. We ran all the way up to the rejection block. Now can we come all the way back down into the breaker again now? Weaker array, stronger array. Queen beats pawn. Now we're back on top of this array. We've closed above it. Support. Weaker one gives way. We should go higher price. Unless we run all the way back through this again to a discount array to fill that last little piece in here for inside the range still. So rejection block all the way down to discount array here. Would be nice to see rejection to rejection as well down here. So watch that. Now see where the body closes? Just around that line I had my crosshairs on. Now look for a run down into the discount portion. Star Jack, you're completely right. That moment or thought is crucial to understand. D, you're going to have to start cooking stream the second half of the day. Oh, that's right. You know what? The best I can offer in my contribution to the cuisine, my only signature dish, I think, was a seafood linguine. It was a 5-cheese seafood linguine. And I really loved that. And cheese on toast with different types of blended cheeses. What makes you think I like cheese? That's the only contribution I have. My wife's a way better cook than I am. Do you keep track of the 20-minute macros every hour? I notice that on these macros, prices usually breaks opposed to what I've been printing. I don't keep an eye on there's specific times, like a 50 candle. Until Michael said that was a specific macro, I had a 50 candle as a turn point anyway. A 50, 55, 52, 58. Write those numbers down. And if they align with a specific higher premium array, I usually count on that as being a turn off a breaker. Sorry, off of an order block. There's a 50, 52, 55. So we're in a 54 right now. Look for a discount array. We're running out. See how we're compressing again? Compress, compress, compress. All inside this inversion. We're literally banging inside the inversion. It's got to say, I got to go higher, I got to go lower. I got to reach for a discount array. I'm in the smaller range, and the range is actually in 2 candles. You see that? That swing point there, this swing point here, it's 2 bearish candles. So it's got no PD arrays to bounce off of. So you see it going chop, 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 chop in here, and the algorithm says, I got to bust out of here. I got to run out, take out a high for lunch, the lunchtime high. We're starting 5 minutes away from lunch. So take out a lunch high and then start Kaslamo. I'd like to see that come into here, and then the Darwinism called Kaslamo occurs. Write that in your book. It's a very important term. Kaslamo. And for my Spanish friends, El Kaslamo. That's the Spanish version. Well, we've got 50 people watching. That's awesome. Welcome all 50 people. Do you realize this time last week we were trying to get 200 people? Beginning of the end of March or the end of February, I was hoping to break 200 people by the end of the month. We've doubled that in a week. In a week, we're up to 414 people. Man, my heart I love it. Thank you so much for popping in. Those people spending your time with me. There's so many people out there you can spend time with. I tell you, there's some great people. You know, you've got Tanya Trades. Great. She's got you got Hydra. Those are the two that I know that I like some of the stuff they're doing. So I encourage you to go check those out. This isn't one of those I hoard all my subscribers. You know, if you got these people are helping you out better than I can, all I want you to do is succeed. I just want you to get happy and healthy and pass it on. Help somebody else out along the way. And if those people can help you with it, go subscribe. Be part of their plan, man. Because they're good. They're smart people. We're definitely deep into that run now, so we're past the 1 hour chart. We're digging into the breaker. Mean threshold of that breaker is also pretty close to the mean threshold of this candle here on the hourly, right there. Where are we on the 4 hour one? So that mean threshold is the top of that fair value gap there. That inversion. It closes off just above the mean threshold. So we'll watch, see how that plays out on the hourly. They're here because you make the sauce. Thanks, Abs. Thanks, buddy. Let's all give him a thumbs up for the YouTube algo for our friend, the ThetaWaveTrader. Oh, thank you, Thomas. Thank you, sir. Appreciate that. I'm happy to share anything I got here. I'm happy to share. Not many people can say I can share all this stuff, and then I'm in my pajamas. I do it all in my pajamas. That's how chill and relaxed I am. But we're fast approaching 500, my friends. I'm gonna have to get all gussied up in the morning. Unless y'all say no, we don't want to see your face. Just keep the voice going. I'm all right with that too. Premium discount raise, my friends. Look for right here. If this one closes, that creates our swing point, 58. Is that weird? Is that weird? That closes. Did I say 58? Is that weird? It's a swing point. And it got trashed, but it is a swing point. So we're looking for right off of here. So 00 and 2. Write those down. 00 and 2. 00 and 2, especially 2, huge probability of a turn at a 002. Get gussied up, put on some clothes. All I wear is my old fire shirts all the time. My fire shirts have now become, you used to wear them to work all the time. Now they've just become pajamas. All my old fire shirts, all my logos are starting to get all cracked and wrinkled now, like me. Double zero. Double zero. Discount rate. Premium rate. We want to see an order block forming in here. And we do have one, but I'd rather see a body get below that. Close me a body below this order block here. We got one here. They're validated, but they're not really solid. I like a solid way to validate that order block is when you get a body go below it. And we get into a nice little discount array here, and we still have this little fella sitting right here. Order block breaker. This is a breaker, senior array inside another senior array. It's an inversion. I hear you. That's the lunchtime high getting taken out at 12 o'clock. Looking for a run down now. That would be really neat to see that high is being set for the day. Right in an area that we like to see. Right off the freaking high of that thing. Right on the freaking high of this thing. Look at that. Oh, it's just coming all into fruition. There's confluences flying everywhere here, folks. Right there. That was the confluence flying around right at the double zero. How sexy is that? Time and price. Write it in your book, folks. 00 and 2. 00 and 2. Over time, I will share all my times with you and why they become so crucial for price changing. If this turns here, you guys are going to sit there and stare at the screen and say, 00. It's the 00 and time and price. If it doesn't, you go, Darren doesn't know what he's talking about. The 00 got taken 3 candles later. There's the 2, 00 and 2. So we want to see this 2 give way. I want to see the 2 fail, and I want 5 and 7 to give way, and then the squabblers, the squabbling sisters, the squabbling brothers, whatever you want to call it, the squabblers, the 9, 10, 11, 12 candles. I call them the squabblers because they squabble. One of them has to say, one of them wants to set a high or low, so you'll see swing points all inside those candles. One of them will set the low, then the 16, 17, write those ones down, 16, 17, 18, and 21. Write those numbers. They become important. Premium array, discount array, right here. Do we close above it, or do we just wick down, tap it, and come back down again? So we're looking for 7. If 7 takes that high, then 7's going to be the swing point. And if that's not that one, then the squabblers. If we keep going up, I'm not trying to pick the high. I'm just trying to look for, that would be awesome precision if it lines up with the 00 and that ends up being the high right there. But we want to see this support price not close above it again. Otherwise, we're still going bullish. Nothing's told me this is bearish yet. I just looked at that and went, ooh, that would be so nice if that was the high. So we're about to close 2, 1 there. We're still above, still bullish. Double, there's your 2, 1, 2, 7. Look for 7 now. These are normal swing points that you'll see. I've got to find me one of those little carrots. If I have to do a live show with video, then I should get a carrot, the carrot mascot, before we go live. I got to pick an outfit out. Got to do my hair, whatever hair I have left. And we got to get the carrot mascot. Victor! Hola! ¿Cómo estás? ¿Cómo estás? I think that's how are you doing? Or I might have just asked you about your chicken tikka masala recipe. $50 people in the house. That's like a big party. Powell has now been released from the Senate Inquisition. You may leave, Mr. Powell, and take your arms and legs with you. Simo Show. Are the PM sessions going to be any better? Who knows, man? Who knows? We're hitting a premium array with so many confluences right now that tells me this would be just a glorious place to do a turn and start booking her back down for the day. For the rest of the day, rest of the week. Head back down. My Friday session, completely throw that one out the window now. We've far reached past my price point. So unless we have a major dramatic dive down there, I don't see that Friday coming to fruition just yet. We want to see a big reversal today. Run right up and just start booking it down. So the afternoon session will be rather interesting. Let's see what we get. We're getting lots of little chats going on here. 70. There were 70 comments since the last time I checked on the channel. Oh, we're up to 60 people in there on the ThetaWave Telegram. Awesome, welcome. Again, the rule. I'll reiterate the rules. The rules are respect each other, be nice to each other. If you're into drama or you're being disrespectful, you use negative language and you're hurtful, you're gone. We're here to provide love and support, man. I'm not here for drama and peacocking and all that crap. Like, be proud of your trade. Like, I got no problem with that, but be kind to each other. That's all I ask. Use your words and be kind. I love it. There's good feedback in there, good working in there. I love all these minds working together to create shift. The more people we get, we can create shifts. Globally, we could get shifts the more people we get. Now, I don't want it to feel like a cult. It's not a cult. It's just a bunch of people all trying to get together. There's no leader. There's none of that stuff. We're all just trying to share ideas, move forward, get the best chicken tikka masala recipe. That's really my objective. To look for a good food recipe. You've discovered my reason to exist. Where's that one going to there? The top of that would be 832. The 832. We're just still climbing. You see how we're finding support off of these? Inversion. This next little inversion right here. Discount array. Right down to the discount. Found support at it. It's not even inversion. It's just a fair value yet. We came back. Hit it. Look at this one here. Fair value gap. Boom, boom. Found some support on it. Tap it. Going higher. This fair value gap. We're still getting that climbing. We're still finding support to climb. And that was the entry this morning we were looking for to get in on to go long, and we couldn't get it. See that? That entry was looking for the silver bullet. Well, it wouldn't have been a silver bullet. It was 950. That's when the macro started spooling. 55, 56, there's a turn. 58, there's a turn. 00, there's a turn. 4, 7, 6, 7, the squabblers. 8 makes the turn. 12 makes a turn. 14, 16, 18. It's usually 21, 20, 21. Then 27, 30. Crazy Ivan. The run. 48, 49, 50. Macro begins. 55. There's your turn. 58. There's your turn. 1, 2. There's your turn from 2. I tell you, time and price, my friends. It's easy to tell the level of ICT price action experience you have, plus you are aware what it takes to teach. Your channel has more value than most marketed YouTuber traders. Well, thank you very much, Heron. I appreciate it. That's very kind words. Thank you. You are great! Exclamations somewhere. In a long right now, would you say about NQ to the long side? Yeah, you're really in a, if you're in long, here's what you do. If you're long right now, my question to you is not what I think, but what's your fail-safe? What's your plan here? Because what I think is irrelevant. What's your safe, your safe word? Pineapple. What's your safe fail-safe? Okay, so if your fail-safe is, if let's say you entered in off of this order block or this inversion here. No, it's not an inversion. It's a reclaimed fair value gap. We went through it. We didn't come through the other. Let's say you entered in right there. I'd say, okay, I bomb. Would you have this as your fail-safe, or would you have that as your stop loss? This is your fail-safe. So if you trade through this to the other side and come back into it, then you make a little bit of profit. If you start to lose these fair value gaps and they become inversions on the downside that support price, then I would have to say, as long as it's not inside a small range, because if it's just retracing back to a discount array, then you probably should have waited for your discount array to get in to go long. Because you can get super fine finessing on this. For example, if you saw this here and you said, I want to go long, I wouldn't get in there. I would wait for a retracement back into a discount array, and I would try to get it in as close to the bottom of that discount. So I would layer in 1, 2, 3 arrays, 3 buys. So that if I caught the first one, the second and third, if it went through me, I would get out of my second and I would cut the other 2 short. I'd only lose that much and I wouldn't take my full loss. But I'm getting a discount to go higher. If you bought a premium up here, right there, because you said, well, if it goes through me to the upside, comes back, finds support, that's great. If it comes below me, I can get in and out there. Well, you've got a discount array that it's probably reaching for anyway, so you've got to have that kind of built-in slack in there. So look at the range you're in and think, where do I enter in the range? You should always enter in what we call Derek's Discount and Gift Emporium, Delicatessen now, and Gift Emporium. Get your discounts before you run higher. Wait for the range to come back to a range, something you can support to get long, so that your stop loss is here. If it comes down below you, you use the exit strategy, or you don't have to use mine, but if you use my exit strategy, you don't get your stop loss taken, and if you're in a maximum run. Hopefully that makes sense to you. So what's your strategy album? If that's what, ideally that's the ideal trade idea I want to set up. I want to try and get into, so that I'm going to get a discount. I'm going to aim for a higher PD array, or I'm going to get a discount and look for ways to get out real quick. My stop loss is here, and if I keep it, I'm gone. So let's go back to our friends back in the old Cam diaries. The great Cam diaries. Return to Cam 1. Consolidation. Cam 1. Consolidation. Cam 1, Cam 2. Your 3 didn't get taken. Or there's no 3. Cam 1, Cam 2. Consolidation. Cam 1. Oh, you didn't get the Cam 1. Unless you're taking this whole thing here. Then you got your Cam 1. But we'll say this was, you didn't get your Cam 1 here. Consolidation. You don't get Cam 1 there either. Consolidation. If we get a candle goes above, tap on Cam 1 and looking higher. So people, your Cam model people, how many setups have you guys had today? Trading Cam models. If that's all you focus on and you get really good at it, you guys have been killing it today. You've been killing Cam models like nobody's business. All the way from down here, you're camming it. So if you didn't get this one, you Cam people have been in since way down here at 10 o'clock this morning. Cam people have been in this trade since 10 o'clock this morning, and they're way up here. So Cam 1 people, if you could manage to hold on to that for a Cam 1 right here, that was your entrance. After all this, you waited for your first entrance. When you got above it there, you came back, tapped it. Stop losses down here. From that point there is just 214. You've had a 5-handle drawdown. 214, 214, 214. And we're sitting here at 324. You're 110 handles into your day, and it's a Thursday on your Cam model trading. It's a beautiful, delicious day for you Cam people, even on a Thursday. Not that you would have taken that, but like I'm saying, price action, man. It's a delicious, beautiful, carrot-filled frenzy of beta-carotene goodness. And you took out the previous day's high. You could, if you were just aiming for the previous day's high, that's 114 handles. We had like hundreds of handles yesterday that we were calling individually or all at once. See, we're into the volume imbalance on the daily. The volume imbalance on the daily. We're heading for that candle up there, right there, rejection block. Look for the rejection block. If we don't get the high, if we just get the rejection block, 18,337, and then the halfway of the wick. So take your wick, break it up into quarters. If you get 25% and a reaction off of that, doing that thing that we're looking for, that turn, and enter into it again for a short, for a pullback in. I tell you, tomorrow, this is looking great. If we get a stop right there and we open up tomorrow, look at this. Run back into daily fair value gap, the mean threshold. That's all staying open right now. So unless this whole afternoon is a giant wick back down with aggression, I like the rejection block, 50% of the wick. If you lose 50% of the wick, we're going for the new high. If we move up there tomorrow, wick up into there, take out today's high, and then start running back down, this would be a really nice little juicy consolidation smasher right in. Oh, that would be just lovely to get some support off of this now. Maybe dip down, get into the here. Find, Michael's called this kind of setup before, where the next candle opens, close, comes all the way down, lines up with this one here, right off the mean threshold, and then starts driving higher. If that was the 1 minute candle we're looking at right here, that's exactly what I'd be looking for. Are we getting a reaction off this? Are we going to take the high out, create that little 1 minute reversal thing, and get back down into here? That would be on the seconds chart, obviously, but you're looking to get back down to that mean threshold right there. This is all looking really good for Friday. Friday takes the high, come back down into the range with the crazy whipsaw motion. And if you come back here and you tap that and it starts to leave from there, here's some key levels right there and there. They look good. So I'm still looking for the rejection at 337. 337. Do we get it? Or do we not? Here's that setup again. Let me make it bigger so it looks sexier to you. There you go. We've had the swing. Is this the turn point now? It's going to happen. You're going to see this setup when the turn happens. Whether it's today or tomorrow, look for that. That's the reversal setup. Range, we're back into mean threshold to order block. Swing point, look for that order block, return to the old low. Inversion. Let's start moving all these guys back up here now. Body trades below it. That's what we like to see. Trade back up into it. And you want to trade it right there and go short right there, because if you're wrong and the body trades above, comes back, you get out again because it might be going higher. So you're cutting your losses. But you may miss out on this if it comes to here. So you got to be willing to take a loss in there of that much if you trade it correctly. Oh, we have a break-in structure. If that closes below that, break-in structure. Oh, look at this, people. This is the kind of candles you want to see. Oh, I love it. Right on to 1220. 12 o'clock takes out the high, comes all the way back up to rejection, pretty damn close to rejection. We're literally 6 handles away from taking that, hitting that rejection block there. Bouncing off of the discount array, premium, discount, equilibrium. We have a break-in structure with a body, return to here. And this is those, how many times did you get beat up and it didn't work out? Beat up, didn't work out, beat up, didn't work out. And now you're up here, you're going, am I going to get beat up again? I'm not going to take it. Then all of a sudden it turns around and hammers on you. If you have your backup plan, your fail-safe plan, it won't matter if it turns on you and keeps coming back up. You're like, I'm trying to get in on that and I'm cutting my losses. I'm willing to take these little cost of my entries or these little tiny losses for a massive gain. It won't take long to make up back all these little break-evens or a couple of bucks here and there that you may have lost. The moment you get a big run off of that and it starts to drive right back in this range, you're going to be clipping coupons. Great karma. We took previous day's high as well. See, we're in the volume bounce of daily. Safe word is obviously carrot. Yes, John, that is a very good safe word. Carrot. Carrot. Good safe word. LRLR. Setup. LRLR, what's that? Low resistance liquidity run? Oh, yeah. Come in there. Tippy tappy. So if I'm wrong again, I will cash out. I'm gonna get ready with my out button. Oh, I guess I should put my stop loss right there. Order blocks right here. Breakers right there. Senior candle. It's a senior candle inside a senior array. We closed. Now if we get below this guy, it'll be even better. If we get below that guy, I want to get it through the mean threshold of this candle. So I don't want to see it revisit that high again. So if you're super cautious, you go, I don't want to be, I'll give it the rejection block. That's it. As high as I'll allow it to go. If I give it some legs to grow. Ideally, I don't even want to see it come back up into that breaker again. Matter of fact, I don't want it to come back up there, so I'm going to stick this right here. So I'm as close to break even. If I'm right, great. If I'm wrong, and it comes back, taps me out, then I'll just use this to provide support again and go short if I get support off of this inversion next. And some people will say, well, you're pulling your stop loss too tight. Again, that's my fail safe. So I shouldn't have to have a stop. If that's my fail safe and it fails, I'm going to fail there. So why not have my stop loss there? I don't want to have to sit with my finger hanging on my button now. I've got my fail safe coming through. If it blows through me, then I'll wait for another setup. That's the setup. If it fails, it fails. And yes, I can have a stop loss that tight. Because that's my... If I'm wrong, I fail there, and I'm looking for up here. I don't want that mean threshold to get touched in order to provide support. If it does, then okay, I'm cool with that. I take a $30 loss. I want this to pan out, and that strategy panning out means it comes up, taps it, and leaves with a sense of aggression. So the more this lingers in here, the less excited I get. I want to see this inversion here now provide a level of support. I want to get below it, put some padding between me and my entry, right? Mean threshold. I still want this one to go because I'm in premium discount. I'm in a premium. I've entered in at a premium. I'm looking at my discount down here. I need to get through this, and I need to find this. Gives me my support. Buffer. I got a buffer there and a buffer there now. All awesome. This is beautiful. That's exactly what I'm looking for now. Through the mean threshold, through that candle, and now I can move to break even, and I've got a $0 or $10. And I'm in a zero stress trade. I've got a senior array. Now break it. As soon as it pops through here, this is a senior array inside of a breaker, inside of another senior array. So if this had 10 lots on it, for example, I would take off one right there. Right there. I'd take off one. Pay myself. I'm at break even. This is a zero stress trade now. So hopefully I kind of talked you through exactly what I'm looking for, where my fail safe is, where my support is, and where I'm going to start supporting the trade. And that's a level of precision you can find if you stick to all your trade plan with your fail safe. I hope that makes sense to you guys. Now we get the carrot involved because it's time to feed the bear. And the bear loves carrots. That's it. Volume imbalance from Friday close, March 1st. Monday open, March 4th. Okay, if you see the inversion fair value gap on the 5-minute right now, it is my stop and got in just above it. Somewhere, good for you. Abu Powell, take your body parts with you. Laugh my ass off. Now, I've got a, you can either manage the back end or the front end. We have a break-in structure with a body. That was our indication, like, ooh, we got a break-in structure now. This looks like a good place. With all the confluences we're looking for up here, it'd be awesome if it stayed in there now. I don't want to see it come all the way back up and give me a squeeze. I don't want to look at these prices here. Ignore the money. Just focus on this is a zero stress trade. If it comes back and takes me out, it was like, okay, that was fun getting into that. It was fun watching that trade pan out. And if I could take a portion off there, I would have taken a portion off there and paid the trader. And that would have been, if that was 10 lots, that would have been $375 right there. Or 300 bucks right there. You would have paid yourself 300 bucks, you would have broke even, and you would have made $300. That's more than a lot of people make in a day working their asses off. Back inside this order block here. Inversion. Take our inversion now, stick it over here. Now you want to keep finding ways to support your price. On the downside, you want to see this inversion hold and continue going down. That would be nice to see it stay open right up into, this is a mitigation block now, not a breaker, that's mitigation. So you can come all the way into the midpoint of mitigation. I don't want to see any more than 50% of that mitigation. That is from the open to the close, not the high to the low. Mitigation, it can come back to there. If you lose that on a close, then it's going to run up higher into the midpoint of this SIBI, if not close. But then now you've got a breaker. Lots of padding on my trade now, right? We start getting down into here. We start breaking with some big bold candles. We start breaking some market structure on the downside. And this is our breakaway gap now. We caught it right at the turn. Can you turn on ticks? If you can show me how to turn on ticks, I'll be more than happy to try it. I've always wanted to see how that tick thing works, because Lauriston was talking about ticks, and when you get into these consolidations, those ticks, if you assign like a 4,000 tick value for each candle, then you can see clearly the algorithm moving between PD array to PD array and those tick value things. And I'm going to try and hold on to this. I'm just going to let it come. If it comes all the way back to me, I'll take the full, I'll take the $10 win, move to the sidelines. But I'm just going to let this sit now. I'd like to see that sit all the way into tomorrow, back in here, 1817. That'll be like 100 and somewhat handles, if that pans out. Watch the mean threshold here. Put my crosshairs on there. We'll see what kind of reaction you get off that. Then look for this. 50%, that's your consequent encroachment. coming back for a fill. This could come back in a tap this one more time right here. Look for this one right here. That's the breaker. I don't want to see all three of those go through in one candle. So the fail safe right now is we've got a premium discount, so or premium or here and a discount here. There's the body. I don't want to see it run up there. It can come all the way back into that thing. If it taps me out, I'm all right. I just wanted to see. That was fun seeing that run to the first low, second low. So you would have got 2 scale out points at least right there. We'll see if it comes in and takes me out here. Mean threshold, holding price, turn around off that breaker now and go down. You've filled this. You've come to the mean threshold. You've come to this inversion. You've literally come and filled this inversion right here. This is the one I want to. Right there. Premium array, discount array. See that? I don't want to see that go any higher than that mean threshold. Body closes on the low. That's fine. How's that for a squeeze? Now I want to see it get below here. I don't want to see a body close above this inversion here. I want to see this get here. Now we went from premium to discount. We went all the way back into a premium array. And now you want to see it. I don't want to see it come back up in there. I'll close the trade if it does. You should not see it revisit that high. Body's good. Over in the bottom of it is fine. I'm all right with that. You could even see it tap here, then the next candle tap here, and then go down. But I'm happy if that turns around, because right now I'm stuck between premium and discount arrays. Well, more like this guy here right now. Those two. Inside that range, premium, discount. We've hit the premium. This is the important one now. Pivotal is right here. Do we get through this and come back to it and continuation? I want that premium breaker to hold price, senior array, inside a senior array. And I want this guy here to give way. That's a mitigation block. I want it to break. So stop loss now, for me, goes right there. I don't want to see that revisit. So I'll make some more money. So this is managing it from the back end. That's good. That's what we want to see. Order block, padding now. I've traded below it, so it validates it. I want to see a body at least get below it. I don't want to see this wicking crap. I want to see a body get there. If I come back through this, again, we may see another tap. I don't see why you'd want to tap unless we're just working the inside of this fair value gap here. I'm stuck between 2 arrays right now, deciding up or down. Either way, it's a zero stress trade. Oh, you're in long still. Oh, we've got a break in structure, my friend. Be careful. I could be wrong. This could still go higher. You need this to be your line in the sand to hold. If it closes below that, closes below this, then I still think we're going to reach for a little lower yet. That may not be the turn, but we certainly have a smart money reversal, break below a low, accumulation back to here, distribution, accumulation, back up into breaker, second level, distribution. We should see a unicorn run here. They should just go. Sorry, Sommer. I think we're going short, my friend. I can try putting a carrot up there for you, but I don't think it's going to work. So now I'm going to move myself. I'm going to say this inversion here now. That breaker becomes important to me. So my stop loss now goes small. That breaker still is potential. This mitigation block becomes important. Like that mitigation block was important, but it came all the way back up into the breaker. Mean threshold held it. Jeepers, we were under a good squeeze there. And then it rolled over. Because we have a fail point that held, it was the right up to the squeeze. Break that mean threshold there. Got below this guy here. So that's the premium array. If this stops right here, that comes a discount array. I like it. There you go. There's your... Now I want this guy here, down here. Now you'd say, well, if it broke there, you should get out. Well, we're looking at this, so we want to see it. It's reaching back into a premium array to go back to a discount. So we'll repeat the same thing we did there with this breaker here. We don't want to see that breaker's midpoint give way. And I don't want to see this close above here. So if it closes above here, like we've been doing all this time, I just rinse and repeat the same fail-safe rule. Even though I'm giving up lots of profits here, it's my fail-safe. So I'm managing the back end, not the front end. If I was managing the front end, I'd be scaling off portions here if I had a big enough lot size on there to provide me scale outs. I've only got one, so that's what I'm doing. I love that you did that, Sommer. I love that you followed your plan. You followed your plan, and I didn't influence you. Perfect. Good for you. Because it's not about me being right or you being right. It's about you following your plan. Where does your fail-safe go? And be okay with that. If this comes all the way back now and gives me 80 bucks, it's zero. I don't have to worry about anything now. I'm going to walk around here with $80. I don't care, but you got to stop looking at these numbers. Where's my fail-safe? If I close above this one, it's a premium array, and it's getting on top of it, then we're back to blowing out my blowing out that high again, or running above this high at least, and that's going to take my stop loss before it's supposed to. So a nice place for it to stop and start coming back down. It hit the array, mean threshold, nice. Now if I get below here, I'll do a rinse and repeat and do the same thing all over again. Readjust my fail-safe and monitor it all the way down. And believe me, this will work gangbusters if you can stay disciplined enough to follow your plan. And if you get 80 bucks, don't look at what you lost. Look at how successful your back-end, I'm back-end managing is. I gave you 3 different ways to manage it. This is a back-end management. And with back-end management, you're willing to take a big chunk of your profits off. It has to come back to your losses. So look right here. Look right there for a wick up in there. Now here's, you can say to yourself, am I going to add to this now? And my stop loss will go right there, and I'll play the same game all over again. I'm in profits. It's like starting this trade all over again as my new one here, stop loss there. If it trades above, I get out real fast, and that one closes out, so I'm in profit. So right now it's like starting, like this one doesn't even exist, that I'm waiting for a setup in a premium array to go short. Okay, so it's like that one doesn't exist, and you're starting your trade all over again inside that little inversion that's right there. That's where they just tapped. Now this little price imbalance here and here, you could spike up into that. Don't forget we got the mean threshold, and we have to see whether or not we close above this. And when it keeps coming back and forth like this all the time, your fail-safe, it's got to be a rinse and repeat for you every single time. The trick is when you get caught out and your fail-safe, you've made a mistake with your fail-safe and you ran out. Watch this inversion in here. I don't want this inversion to become something. I want to see this hold. So there's the pop up into the imbalance. Now you can pop off of there and come back down. You came into a breaker, came into a nice little array there. There's nothing else above you other than the mean threshold, which is also the midpoint of this inversion here. I've got 5 seconds. I'm going to close this out. 2, 1. See, it's above me. If it touches the high again, I'm out. Oh shit, I closed it. Damn, I pressed the button. I was waiting for it to come back here. Anyway, I was out. If it goes above me, I pressed the button. I got excited. I pressed the button right there. So I would wait, and my stop loss, I should have just dragged my stop loss down to here. So we'll wait and see. See, we closed above. Stop loss would be right here. If that holds now, I can sit there and go, I need to learn to move my stop loss and not press the damn button. The stop loss will be my protection. So that's where how tight I'm squeezing it. That's the fail safe right there before my stop is taken. Now if it trades below this, comes back to it, you can get short again with your stop loss up there, because now that breaker, you're expecting the breaker to hold price. But look at all these beautiful little scale out points you could have been cashing yourself out. Look at that. I shouldn't have pressed the damn button. Okay, so we're looking for the break for it to come back to here. And the stop loss will go right there. Look how close that was. Do you see that? Hot diggity dang. And I twitched on my finger. That's what happens when you get older. You get the twitches. Shorted 310, 289, flat. You're out. Now it will move. As soon as you're right, Derek. As soon as I touched it, I'm out. I got screwed. Anyway, we'll just rinse and repeat. So we're back to that order block again, looking to try and get in there. And I want you to keep an eye on that trade that we took up there, and how we're constantly managing it from the back end, and how they provide support. And oh my God, I'm about to cry. I'm about to cry. I hit my damn finger. Curses you! I'm seeing this in consolidation now. Order block, order block, order block, order block. So we're just kind of banging around inside mitigation and pawn. Now if this rockets down here from now, I just go, oh, curses you, rabbit, you waskety wabbit. So there's watch the close below this inversion here now. We're inside this range, this candle, that candle. We may come back and get me one more time. Don't forget the kid at the bus stop. Come get me. So see how we're compressing? So blasting up. If it blasts up through us, we got our stop loss, our fail safe. Come on, pop me in there. Oh yeah. All right. I don't want to see that mean threshold give way right away. Tap it. I'm all right with that. Come off of that. I'll even let you take the high of the inversion one more time. Maybe rejection. So this is like getting back in flow again, saying let's continue following through with the original plan. I don't want to see it hit rejection block now. There's rejection. That's going to take me out. So now we're above a premium array. So here's where it turns. Now I'm back. I'm bullish again. I'm back into Sommer's idea. I've gone bullish because it came back through my pretty array, did not find support, ran through my high. If we get a body break above that, it's a break in structure again to the upside. And then we're looking for the same kind of swing point setup, which we had right here. Oh, no, I didn't see it. I didn't see it, people. This is precision entry. What we saw up here happened right here. See this? Swing point low taken with body breaks above it right here. And then we come back and tap it perfectly right there. Now we're going long right there. I didn't see it. Here's where they start to overlap. When you get into consolidations like this and it breaks, goes back up, breaks, comes back down. This right here is this right here. Do you see that? Body breaks above it, swings all the way back right to the open. What a precision entry. And then first scale out right here, second scale out there, third, fourth. We're finding support above this now. So that whole idea of we are heading down here, I married an idea of going lower instead of missing this right here. That's what you look for when you want to go long. Those are the ones you look for around 10 o'clock in the morning and you're looking to go long. You're looking for this setup right here to break a low that occurred at 8:30, 9 o'clock. You're looking for this setup to come back in, tippy-tappy, with precision. You are off to the races and you let it sit for the all day now. That would be this entry we talked about yesterday. Let me show you this one yesterday. You'll see it. Oh, sorry, it's going to take me a while to get back there. 10 o'clock. Is it already? Well, there it is. So here's the swing. There's your setup right there. That's the swing around 10. And what did it do? It took out, well, it really took out the 9:30 low. Takes it out, comes back up. Look at that, right at 10. 10:15, 10:16. There's your silver bullet. Enter. There's your drawdown if you took it from there, or the midpoint. If you wanted the whole thing, you missed that whole day. So you have 3 layered entry. Stop loss sits right here. And now you're in. That same thing I just talked about. You get in. Or if you put it in here, here, and here, that's fine. You just wait. Your silver bullet here at 10 o'clock is your reason to hang in there. Your stop loss still sits down here anyway. All 3 of those entries are in, and you proceed to enjoy a delicious day of... It still didn't take you out down there at 10:30. You're down here. Still doesn't take you out. Oh, I think it took you out there. Oh, the day is over. That's 18. Oh yeah, 10 o'clock's there. I jumped over too far. There's your 10 o'clock entry there. And that's the day you enjoyed all the way up to here, which was Abs's call for the day right there with precision. God bless you, Abs. You were awesome. I looked for this guy right here, and Abs looked for his one there. He was the king. King of the Abs. Anyway, let's get back over here. Let's have a look where our entry is going again. See, we're consolidating here. So we're going long. Now we're going short because we closed below it. We're between these two arrays now. So you're just going to get beat up in here. So you wait for a new setup. But it was fun. It was fun. Your scale outs, if you had them, you would have taken them and you would have profit, break even. You would have been cleaning up a lot more money than you would have had 3, 6, 3, probably like 5, like $800 out of a 10 handle and break even or slightly in profit. So that's managing from the back end. Hopefully you got something from that. You trading 1,000 lots moves the market. For a successful strategy, I will trade against your orders. That ensures your success. You want success? Wait for me to go out, and then it will go in the direction you want it to go. Derek's learned that already. So, discount array, premium array. That's where you are sitting right now. You've come back up to the bottom of it, also the inversion, and now you've got this inversion and that order block right there. So see how we're banging around inside it now? The algorithm's got to go, I got to get out of here. I'm stuck in here now. I've got to get out. I've got to reach for higher PD arrays or lower PD arrays. Now here's the interesting thing is, if this was your original entry right there when we got in, and you said my stop loss is sitting here, I now move to break even and I let it sit for the rest of the day. I don't care if it comes all the way back to me. I got to allow for a lot of this shellacking going on here, this flopping back and forth before it finally breaks down. And I've got zero stress. You walk away from your charts and you come back at 4 o'clock and see how well you did. If you've picked the high, you would have nailed it and you're at break even. So even if you're wrong, then you say to yourself, do I move to break even before I leave to go golfing with Derek, or do I leave my stop loss up there and willing to take 1% loss for the day and let it run, walk away from it? Because here's where Darren talked himself out of it. It's only because my fail safes were finally broken at one point and I got out, or the fact that my nerves and my twitches, the shakes, my shakes took me out, which is kind of good because it would have taken me out anyway. Well, you would have seen it right here. Now that you've gone premium back to discount, when you're into this area here, then the failsafe would have had to have moved into this area here. As soon as we broke above it right there, you go, ooh, that's not what I want to see. If I don't react off this and come back down and it starts to break up again, then you get out. That would be the line in the sand there. So yeah, either way, you're going to get beat up in that. Flat bottoms, I like that. Run the highs. We've extended the array past the mean threshold now. We've taken the wicks and we've taken the wicks. We've taken all this liquidity sitting here. Wants to go short. And look right here, keep that one in mind. I'm going to put that out there just so you see it. on how many times you tap on that thing throughout the day. And I'm willing to go here and start this whole process over again. Again, that's not the loss I'm going to take unless it rips through me. This is the trade all over again. Here, I'm going to rinse and repeat it. I like these equal lows right here, and I'll actually put a target for a short term right here for a discount array. If it doesn't get taken. Well, you're talking sexy trade talk there. VIX, Dixie bonds, and treasuries are bearish, negative correlation, tailwinds to create more bullish behavior. Man, you're talking some sexy stuff there, IBOM. That is a guy who knows some serious effects of other commodities, other markets that affect this one. That's really good. I don't have that level of expertise. That's why I love the fact we got people in here that are way more gifted than me, that are just excellent at seeing stuff like that. So cool. Increases bullish behavior. And you're right. Right now it's bullish. We've traded above our premium array in here. Find some support. Run in higher. There you go. Come back, find support at it, go higher. Discount array, longer range. Discount array, premium array. I want to see it come into a premium array and then run back down to a discount array and grab myself some quick cash. I want to trust that the arrays are providing me, and there's a breaker, is a senior array inside a senior array, was going to provide me a level of support before that, and it rolls over and comes back into a discount array that is like array to like array, and I can get out below those lows. So I'll put my take profit down here. And we'll see if that trade pans out. I don't want to see it take it out first, just because it's cleaned these out. I want to see it pop in here one more time before it does that. Because you see how this is premium discount. What's this right here? Equilibrium. You don't trade in equilibrium. You trade in premiums and discounts. I'm getting some serious hunger pains going on here. Well, if you guys continue to share stuff like that, we're all gonna grow. So IBOM, thank you very much for that. You know, we're all gonna keep learning. So it's coming down to that discount array. Now, what would be fun is if it comes into here, catch a long right there. Now catch a long to this guy here. So let me close that one out now. So watch this array here now run up to a higher array. That's what I want to see. I'm going to put the carrot on the side here. Okay, we got this little imbalance right here. Run that. See where this closes now. What have we got above that's similar to this? See how we got so many different arrays overlapping each other inside these consolidations? And you go, which one do I read? Which one do I stick with? 1 p.m. runs highs or lows. Oops. Tap it. Oh, let's go long. I should have just gone long. I'm not doing any live trading here. This has just been plain demo ball. $50 to 10 minute hourly macro. Yeah, all 50 to 10. 50. All the way up to 10. I'm looking for that up there. Ideally, you're looking for this one here, or ideally, you're looking for that range here one. But this guy here could hold price too. Inside the range. So right now my stop loss would be like right up tight to this, and I'd be watching this, and as soon as I get into a premium level, I'd scale out a portion here. If you're trading inside consolidations, don't try to run for always get highs. Scale out at your instead of looking for those little points that we're looking at here, scale out, scale out, scale out. When you're in a consolidation and you want to trade a consolidation like we had a perfect entry here, then you want to go, what's my range I'm in right now? As soon as I get above 50, that's a scale out point. When I get into the next pre-array, scale out point. Next one, scale out point. Breaker, scale out point. If I take the highs, we're sweet. But you're paying the trader and you move right to break even right off the bat. That way it's a zero stress trade. You're making some money on the way up. You're in a consolidation, so you're super scalping. So I'm still looking for that one up there. This is great. So we're losing the midpoint of that. That would be a scale out point. And this is how you trade a consolidation. And you're trading ranges with like array to like array. You'll hear me say it over and over and over again. So pop up in here now, then it gives you that whole thing all over again for a short. We've taken these lows out here, these equal highs out now. They're the next one to be targeted. So from here, I would move my stop loss to 50%. If you're trading it for the back side versus the front side, trading inside a consolidation, again, both methods you can use. This inversion right here, you want to see that hold price right now. So I'd move everything into profit. So you're zero stress and you've scaled out portions and now you're in 100% profit here anyway. There's your scale out, next scale out point, and reaching for a higher PD array. This would be a mic drop moment. This is where you go, okay, now I'm going to drop the mic and leave. I have done my work here. I have shared the algorithm. Come on, tap it. Yeah! High five, everyone. Woohoo! PD array to PD array. Now slam her down. Slamma jamma ding dong. Right there. You see that? That's another Darrenism. Write that in your book. Slamma lamba ding dong. You got to get that right through here now. Now you got to think premium rate. Just going to, do I continue to eat through the breaker? Or do I find support at this thing? Now if it drops down below it and pops into it, get short. And you're reaching for, again, breaker. We have now swung below a low. See that kind of thing we talked about before? Body breaks up above it. Look for it to return into here to go higher. We've swept below a low. Didn't take out a significant low, but we did sweep here. Create that little pattern we're looking for. Now the same kind of set up here. We've got a fair value gap. We want to trade below it, come back to it, find some support, continue back down. So now you've got two overlapping, one going high, one going low. Welcome to consolidation. So your eye goes right here now. Is it the rejection block that's going to hold us? Is this thing going to hold us? Is that whole thing starting up today? That whole entry starting all over again right here. Okay, my mind is frying. And I'm hungry. Still no breakfast. I could use Derek's scrambled eggs right now. This is like fasting for me. I haven't eaten since last night, 11 o'clock. I don't know. I bless you guys. Ramadan. You guys are amazing. How you can last 16 hours without eating. Wow. Incredible. So again, that trade right there that we were taking this morning, you scaled that all the way down. It broke you, you got break even, you made some money, you got the same entry again, starting all over again. You've made some money today and you're coming back in for seconds. You got this little inversion, this swing point here, that little inversion. Look for this guy now. Can you say rinse and repeat, my friends? Look for the range. Like array to like array. Let's move this guy right here. You see that? Oh, you guys are gonna start loving price action. What's a discount? What's in the middle of all that lot? Right here. You had a precision entry, precision exit. Now you're looking for another precision entry for another precision exit. You got to get below here though. And you're scaling out, doing the same thing I told you before, 50%, scale a piece off there, move to break even. Look for another discount array. And I've now showed you how to trade inside a consolidation, reaching for specific PD arrays with precision. And with that, I might call it quits today because my brain is, just give me this now so I can high five you guys. And 62% of that range, take out some profit. Use your fib tool to scale out if you want. You're trying to get super snipes and your stop loss is like definitely in profit now. You had perfect entry, slam it right into here. You want to reach for a discount array now. You're already past the 50%. So what you could see here now is if this snaps back to here, then drives down to here, expect to see that. And that's on a 16 candle. Okay, I didn't mean to tell it to do that. I was just using that as an example. So hit here, then roll over and come back to here. There's your order block. There's an imbalance right here, so you could come up here. All right, now where do we go from here? This would be the next price leg then. So when you see this starting to form, if you lose the mean threshold of that, which is back into that guy again over here, you scaled out. See how you scale yourself out? You move to break even or move to profit. You even took pieces of a half a range because you have your scale out theory, right? 50%, take a chunk off. So even when it fails for you and it can come all the way back to take you out, you still paid the trader and still broke even with whatever was left because you used the strategy. So you're paying yourself on the way down. If you don't get this, at least you paid the trader on the way down in a super snipe scenario. So if it turns on you, you go, that's okay, I still collected some profits. See, it's almost like foolproof, right? You got your gut. It's just one of many strategies you can use to trade inside a consolidation using your fib tool as your scale out. Because this is probably 62%. Let's have a look. Let's just see if you would have got paid twice. Ding, 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 ding. 50% is all you would have got. 62 didn't quite reach it. 62 would have put you right on that little inversion there, or a little fair value gap. And remember, every time you pay yourself, you move your trade. Another way you could do this is as soon as you hit a threshold, or as soon as you hit a scale out point there, you move to the previous one. So if you hit 62, pull your stop loss to 50. If you hit 70, pull to 62. If you hit 75 or 79, pull to 70. And then when it comes back against you, you've scaled out. So you can use that as a scale out tool as well. There's so many different strategies you can come up with. So now we've ran the high. Interesting. Okay, so what we did was we pulled back. Now my concern is that this is going to be the next price leg up. So we need to see this little inversion here provide support, or that guy provides support. What are we doing here? Oh yeah, leg. Price leg. So now you've broken above the premium array. You didn't get this discount array, so that tells me that, okay, are we just running liquidity here? Now we're going to run down a drive for this. We got to get below that, get below this. We're coming back into this range here, so now we've got a whole new guy we got to look at. Not just that one. These two are overlapping themselves. That one's over. All three of those are overlapping themselves in a premium portion of this little range we've just created here. They're overlapping. So if you see this banging around inside here for a bit, you can bet you're bouncing around off of these little arrays. Inside that one that was further back here too, earlier today. Wherever that other one was. Right there. Got lots of them overlapping, so we can see this banging around in here for a bit. I'm on day 6 of a water fast cleanse. Oof. I've done a little reading into that. That's really hard on your body. 6 days with no water. What would I do for what I would do for a carrot right now? Yeah, I hear you. How many days do you fast water? How do you mean days do you fast water, John? Summer's like, it hasn't hit my stop loss yet. Okay, man. This would be great. So if you're bullish still and it hasn't hit your stop loss, you may yet clean up today, my friend. PM SB looks promising. SB, what is SB? My mind's starting to freeze up on me here. Water only. Oh, only water. Okay, I see you. I was going to say you really need water. It's an essential element for flushing toxins away from the cells. Every cell in your body is bathed with lymphatic fluid, and it only works. It's a closed system. It doesn't have a pump. And the only way your lymphatic system works and flushes, your cells are pooping all the time. That's how I look at it. Is your cells they're releasing toxic waste from cellular respiration. Oxygen goes in, oxygen comes out, carbon dioxide comes out, waste products from cell metabolism all come out into the outside of the cell. And lymphatic fluid bathes every cell of your body. So as you move, that is what, every time you squeeze, you stretch, you move that lymphatic fluid around and away from your cells. So you literally flush your cells every time you move. That's why exercise is important, and water is essential for your body to continue to send more fluids in there to be able to flush your lymphatic system. It's a blunt end system. If your lymphatic system failed, you'd be dead within 48 hours from the toxins building up in your cells. They literally are the garbage disposal system for your body. It bathes every cell and flushes every cell of your body. You must move, you must drink water. Essential. So good for you, John. Initially 7 days, but I feel great. Workouts have not shown regressions. Still feeling strong. Good for you, John. Keep up the water, man. Oh, silver bullet. Jeepers. Thanks. You're right, silver bullet. We're in a consolidation now. Just what we were talking about, just going sideways because you're banging around in all those PD arrays right now. Those overlapping inversions and stuff. It's just popping around in there until it makes its mind up to go either higher or lower. Derek, no water, just beer. That's how I like to get my water. Through the barley. I've been keto for 1 year. Wow. How do you find keto? I tried keto. Man, that takes some discipline. I lost some great weight with it, and it's really hard on your kidneys. So you really have to drink water in keto, because your ketosis is a high acidity, and it's really bad for the proteins in your cells. It degrades the proteins in the cell, the bipolar phospholipid layer of your cells. They have this proteins. It's called a fluid mosaic model. They float around inside that like little icebergs, and they're proteins that allow for, they're channels that allow for nutrients to flow in and out of cells, and a high acid environment eats away at those proteins and causes cell denaturing. They break down. So water, you gotta drink lots of water for ketosis. It's really hard on your kidneys. So another interesting diet, but you gotta work like crazy to keep it. Quit drinking 5 years ago. I've been intermittent fasting since then. This is my first multi-day water fast. Wow. I've just had coffee this morning, and I always have to eat sometime in the afternoon. I find my focus starts to wane. Like right now, I go and looking at candles, going, I see where it's going. I see what it's bouncing off of, but I'm getting tired looking at them. Headaches, day 3. Yeah, I would imagine you would. But now I'm good. My wife is now at 20 of 40 days water and some kind of bread only. So she is feeding her brain some carbs. Your brain does need carbs. So she's giving herself some carbs at least. Lost 3 pounds. I take Animal Pack every night. You eat a pack of animals? Do they come freeze dried, or what's Animal Pack? I eat a small bag of rodents before bedtime. I have my Animal Pack. Sorry, Justin. Or Victor, I don't mean to make fun of that. I think that is why I had headaches on day 3. My wife and I exchange. She goes, I miss you. I'm like, I miss you too. You're so cute. And she goes, you're so cute. See, after 10 years, you keep the love alive. You find a reason to just hug each other. She's such an awesome lady. She's taught me a lot about kindness. I've seen so much of the crap in my job. She's just a whole breath of fresh air. Yeah, I do take multivites every day. But vitamins, like anything, there's a lot of misbelief about vitamins. Vitamins are all fine and dandy as long as you got food. They're just catalysts that help move food and elements into your cells. Vitamins by themselves, you can't just live off of vitamins. They're the little trucks, transport trucks that help to move nutrients in and out of cells. You need them, by all means you need them, but you still need to eat food. And the type of diet you have is entirely up to you, but you do need those nutrients to keep your body alive. And the vitamins alone, I hear people just being on a vitamin diet. It's like, no. You just got the most expensive pee in the country. That's all I can tell you. You're just going to pee out what you don't use, you pee out. And North Americans tend to have the most expensive pee in the world because we pour all them stupid vitamins into ourselves and we don't eat properly and you just pee it all out. Food first. Yes, indeed. Okay, we're into 1:30 and nothing's really happening. This is where I'm going to leave you guys for today. And Derek's getting his finger on the button ready to sell something because the moment I leave, it's just going to take off. It's going to rocket. And yeah, I think that'll be it for me today. That was a lot of fun. That was a lot of fun calling those little highs and lows, doing intraday or intra consolidation scalping. We came up with some new ideas for intra scalping. We talked about the fail-safe today and how to manage a fail-safe. You got to see me do a fail-safe and how when it fails, you make a bit of profit. How to get back in, and if you lose small instead of lose large. Your stop loss is a stop loss, and your fail-safe is a fail-safe. Your fail-safe gets you out of the trade before your stop loss is taken, provided you get the opportunity to get back in. So hopefully you got to learn a little something today, or you got to see it being used, when it works, when it doesn't work. When you're in these consolidations, we're looking for those magic moments that and be aware that the opposite side can happen to you at any moment. My alarm goes off and it starts going up. Curious. See that? Just I was about to hang up and it's starting to move. The algo's like, wait, he's still here. Wait till he leaves before running for the higher time frame premise. We're still looking for rejection block. Oh, do you see how? I just want to point this out to you guys. Michael teaches this. When you look at this range here, I'm going to show you something here. This is kind of neat. I want you to see this. Just going to invert this for a second. Okay. Look at this range we're in here and see how we're in the upper portion, that's 75% of that range, and the 50%. So we're in the premium portion of a range. When we traded back into the discount to get ourselves a discount to run back up above the old highs. We ran above the highs with a small candle, and then we moved back into the next range. We extended that range a little bit here, and then we traded into, we had this premium array and a discount array inside the premium portion of the candles. Remember how Michael talks about you have a high and a low, you have a premium and a discount, and of the premium you also have a premium and a discount, and it trades inside the premium and discount of that, right? So this is premium, discount, 50%. We ran down to gross finite. Now we went above, we extended the range. So now you're looking at that range we're sitting in here between high and 50%. That's a premium and discount split right there between that little red area there, and if that's red or gray, it might be pink, I'm not sure, can't quite make it out. But between that level and that level is your premium and discount. So what do? We're in the premium, we ran down into discount, inside an array that is in the discount, to run back up above, extend our range again, into a discount array. See that? There's the premium discount again. We extend the range, just popped into the discount again, and then extended up. I just wanted to kind of point that out to you guys. I thought it was kind of interesting. Something to look for. I've been taking electros each morning with coffee. I wanted to drink 3 cups. I wanted to do some sleep. The headache is so bad. Caffeine withdrawal. Yeah, that vasoconstriction can be a real bugger. Try Gravol. Try a bit of Gravol. Or Benadryl. We usually give Benadryl to patients who are have migraines and stuff. You give them a fluid challenge, and then you give them some Benadryl. My guess, throw the carrot up top. Let's throw the carrot up top. Before I leave, let's throw it up in here. Thanks, Dee. Appreciate your time. Gracias. Before you go, it's carb withdrawal. Yes, I will trust cam models. Oh yeah, here's another cam. Cam model, break above, come back. Look at that, tippy tappy. There's your another cam model. You cam people have been killing it today. Like killing it. We've seen cam models all day today so far. And now you've hit your carrot. You've hit the rejection block. You're in there now. Now look for 65 to, or so 25 to 50% of that wick. If you lose 50% of the wick, we're running for the highs. Don't assume you're running for the highs right now. A lot of people get slammed right here when it turns around and pummels you and you don't get the high. Even though you're that close. Rejection block, pay yourself. If you entered in at this beautiful point right here today, right off that inversion, you came down, tapped it, I'm getting long right there, off the mean threshold of that candle, and that inversion to go back into this little area here, and I'm getting out right there. You have had a beautiful, stellar 933 to 337, so that's a 300 handle day for you. And it's precision. Off an old high, like, man, oh man, you entered in there today. You had a 300 handle day. Now, were you patient enough to weather all this stuff? Where's 25% of that wick? Let me just do this wick before I go. I want to see, oops. I want to see the I want to see the 50% Oh, right where the tip of the carrot is. Perfect. If you get a reaction off of this and it snaps down, you get that same kind of setup we were trying over here. And do the same management thing that I did here. And you're kind of save your trade if it continues pushing higher. So 25 there, 50 right here. So we'll put 50 up here. $346. So look for the carrot here. That's 25%. That's 50%. If you blow through 50%, then we're looking for a further upside. But that wick is how you fracture that up now. 25%. If it hits off of that and comes back down, it's a sign of weakness, which means we should steer a run back into Friday here. So I can't remember who it was yesterday who said, Darren, are you crazy? How do you know that Thursday's going to be a reversal? Clearly I don't. Clearly I'm wrong today. I don't mind being wrong. Anyway, before you go, it's a car, Boris draw. Yes, I will trust cam models. That day passed now. I feel great. I am looking to push the 7-day. Good for you, buddy. Follow my plan, and it paid out just to hit my take profit. Sober! You go, man. Stick with your game plan. Buddy, I'm glad it worked out for you. I'm glad yours definitely worked out for you. I'm happy for you. I'm definitely happy for you. I don't regret saying it at this point that we're going short. It wasn't until we started breaking that to the upside right here. And it came down right inside it here. Stop loss was here for your long. That's this here was this here that never got squeezed. And you finally got your objective. So that's where I was on your side for Somer for your run back up. Okay, so this is what you look for, and when you want to go long, that's what you want to look for when you want to go short above an old swing point. That was a small drawdown from there to there inside that trade. And Somer's winning like a winning and a grinning. Good for you, Somer. Well done, my friend. Well done. 130 macro reversal or continuation. Yeah, who knows? It just keeps slowly marching upwards. Wait for your swing setup, and then wait for your fail-safe if it doesn't work. If you catch a swing, that swing setup, we'll talk about it tomorrow. If it happens, we'll look for it. If we get a swing setup, oh my goodness, you're going to catch yourself a gravy train there. Goodman, cheers for the session. Erie 420. Well, you're new. Welcome. Well done, Somer. Woohoo, Somer. I like people supporting each other. We're all in there for you, Somer. Good luck. Well done, man. Okay, I'm moving to the sidelines. Gonna have some lunch. And again, if you guys are in, if you're new, pop in, subscribe if you like. If you're looking to contact us after hours, we're all available. All the usual characters are in the ThetaWaveTrader in the links on the section above. Go to the bio link there. You can join us in the ThetaWaveTrader. We've got 60 members in there, and the usual people are in there. We got Dave and Russell and John, and good old Derek, and Victor from Singapore is there. Mike T and the friends. and even Cherish, who won her funded trade yesterday. So we got all the usual clan in there. If you guys want to have a chat with them, they're always eager to share their knowledge with you guys. So you're welcome to pop into the ThetaWaveTrader on Telegram. The link's in the bio above. Until then, my friends, I've really enjoyed this morning with you. Thank you for letting me spend some time with you and sharing the reading of the charts. And I will see you guys tomorrow. Best wishes. Take care of each other. Love each other out there. Be kind to one another. Pass this on. If you've made some money today and you can share a little bit with those less fortunate, please do so. Take care, and I'll talk to you guys tomorrow.